Good morning, Futures family, Team Topstep. It's time for the opening call for Thursday, October the 19th. Ooh, gives me a chill just thinking about that date. But as always, our focus is on context, risk management, patience, entertainment, fellowship, trading, education. Everything you want is right here for you on TopstepTV. It is the anniversary of the 1987 crash. Maybe we'll talk a little bit about my experience on that day. I wasn't an active trader, but deeply involved in the execution that was going on that day. And we'll take a good look at that. And everybody, don't forget to pray for peace. Speaking of peace, my good friend Andre is with us. Eddie is still out. He'll be back on Monday. We got MP is going to be out today as well. So we've got a lot of things going on. A lot of things going on in the markets. Andre, how you feeling this morning? You ready for this?
I'm ready, Johnny. This is a big day. Like you talked about, we got a lot of Feds talking Feds coming out today. We got the 10-year on the cusp of 5%. What does that mean for equities? We got Powell coming out at 11. Strong earnings season so far, and I'm really looking forward to hearing some stories about October 19th, 1987 later today in the show. Like you said, it's you and me. We're going to ride this out for the next couple hours. Thanks for hanging out with us, and let's do this.
Yeah, let's do it. Yeah, from what I was reading last night and this morning, I mean, it seems like the investor and trader mindset is really focused on Powell, who does speak today at 11 a.m. Central Time. A lot of folks wondering if some of the decent economic news is going to keep pressure on the Fed to maybe have another rate hike. We don't know what's going to happen. It's 2 weeks from this coming, or a week from this coming Wednesday, 2 weeks from yesterday as the FOMC meeting. As far as economic numbers this morning, we had jobless claims here this morning. The continuing jobless claims was a little bit higher than expected, but the initial jobless claims, they were looking for 212,000. It came out 198,000. That's a 9-month low. Don't know what that's going to do with what the Fed is thinking about rates at this time, but just something to keep in mind. The Philly Fed also shows retreating in economic activity in the Philly Fed there. They were looking for minus 6.4. Came up bigger than that, minus 9. At 8 o'clock today, we have a talking Fed Jefferson. 9 o'clock, existing home sales and misleading indicators. 9:30, the nat gas numbers due out. Again, 11 a.m. Central, Powell speaks. Goolsby at 12:20. Barr at 12:30. Bostic at 3 o'clock. Harker at 4:30. Logan at 5:40. And as far as tomorrow is concerned, there are really only 2 talking Feds, no economic numbers tomorrow. It's going to be a typical Friday probably for most traders. Try and make a little bit of money, preserve capital, and call it the weekend early.
That's right.
Earnings. Taiwan Semiconductor beats on both. AT&T beats. Marsh & McLennan, I mentioned that yesterday, big in commercial real estate. I'm kind of keeping an eye on that one. They beat both earnings per share and revenues. Fifth Third Bank also beating on both. Union Pacific, mixed results there. They down a little bit on revenues. And as far as the VIX is concerned, it's 19.5, getting close to that 20 level. Dollar index is down a little bit this morning at 106.3. And everybody's talking about the 10-year. 4.94%. Pretty close to that 5% level that, of course, has been keeping some pressure on the equities, as my good friend Andre has mentioned. What do you got going on today? What are you doing this weekend? What's happening?
What am I doing this weekend? I have a birthday party this weekend on Saturday. I don't know how old they're turning, but yes, I was invited to a birthday party, nice dinner downtown, and I believe we're going out afterwards. So that's the only thing. Tomorrow, I'm looking forward to just staying in and maybe watching a movie and chilling. How about you?
After a nice long week of trading, yeah, pretty much the same. No big plans. We got everybody in the house, I think, is a little bit under the weather. I'm doing okay. I kind of felt like it a couple of days ago, but
same here.
Well, right?
Same here.
Kind of taste it,
Yep. On Monday, I wasn't feeling too hot, but I'm better now.
You're good now. All right. So we are all good to go then. Let's jump into the charts.
Cool. What are you going with first?
All right. E-mini S&Ps.
Got it.
Now, we where are we here? So yeah, we had a test of the weekly kickoff high on Tuesday. Monday it didn't get there. Tuesday, Wednesday, Thursday. So yeah, we had a test of that on Thursday. That's been pretty much the high of the week, right? That was resistance. Market's been coming off ever since. Yesterday, volume, nice volume in futures on the way down yesterday. There was a delta divergence. Also, there was positive delta on a market that was moving lower. I was extremely confident we were going to see a jump in open interest on this, Andre.
Yeah.
It didn't happen. We lost open interest, minus 5,400 in open interest. Usually, when we have a delta divergence on a directional day, there's a big jump in open interest. I was looking for longer time frame sellers to really barrel into this market and add some shorts to their positions.
Right.
Didn't happen. So there's a little bit of confusion in there for me. This market, I think, really needs new business for a continuation to the downside. It needs information or it needs new business. We'll take a look at where our overnight traded down to, the 200 session moving average right there.
Yep.
We did on the 30-minute and the profile chart. Well, let's take a good look at this. Is this a late spike? Oops. Is this a late spike or isn't it? Hang on. There we go. So the market moved lower all day yesterday on increasing positive delta. That is an indication sometimes that longer time frame traders have maybe adjusted inventory, added to inventory. Yet yesterday it looks more like there was a long liquidation move in longer time frame than an addition of new contracts. So that's why I'm saying if this market is going to continue to the downside, it needs new business. It needs new sellers to come in and continue this market lower, not old buyers getting out. When old buyers get out, they take selling power away from the marketplace. Andre, you had something to say?
No, I was just thinking about what you're saying. Old buyers take, can you say that again?
Old buyers, in other words, long liquidation.
Right.
Takes selling power away from the market.
Gotcha.
Okay, because if
that makes sense.
If they're going to get out, they have to sell.
Gotcha. That makes sense. I see.
Right,
okay.
Right. Okay.
Yep. Thanks.
So we had this big tail at the end of the day yesterday. Normally, if the market closes inside that tail, it would be a late spike. I'm still looking at it as a late spike. Now, the late spike rules. If we open in or below a late spike, that's acceptance of lower pricing. If I'm going to treat this like a late spike and we open above it, that's rejection of lower pricing. I'll look for the market to return to higher pricing. Okay. Don't forget, we tested down to that 200 session moving average in the overnight session. We did not find acceptance there. This is going to look more like excess yesterday than an actual tail. So we've got opportunity this morning, and we may be kind of looking at an earlier opportunity. We're going to see what the market does on the open and take a look at the opening range. Right. But right now, if this were a late spike, it would be rejecting lower pricing. We're going to look for opportunities to buy pullbacks, perhaps, unless something changes, unless we start to show acceptance in the late spike or below it. So, as far as the profile is concerned, the settlement price is right at the start or the base of the late spike, 43.42 quarter. Okay. That is where the late spike would begin if we've closed lower. We closed right on it. So there's some cognitive dissonance here. Not quite sure how to treat this late spike because it didn't really truly leave a late spike. It left what looks more like excess on the lows. So we'll be watching on that open again. So yesterday's session, even though it was to the downside, was a normal variation day with a neutral stance. This market should be looking for new levels to facilitate trade. Whether those levels are higher or lower, we don't get to choose.
Gotcha. Okay, cool.
So, yeah. Take a look at the NASDAQ now. Here's the daily chart in the NASDAQ. Let's scale this so we can all see. All right. what do we have? We have a coiling kind of market here. I mean, we've got some lows here. We've got some lows here. We have lower highs. And we're right in the middle of it. We did kind of break out below the short time frame area of balance yesterday. Did we leave a late spike? We did leave a true late spike in the NASDAQ. We'll see that shortly here. Volume was good. What about open interest? We lost 700 in open interest. That's 2 days in a row where the NASDAQ has just had inert changes in open interest. There's nobody accumulating anything right now in the NASDAQ, according to that information, according to the lack of changes in open interest. Okay. Last week's low was tested. S&P has tested the 200 session moving average overnight. NASDAQ still has a lot more space down below. It's holding up better. Well, of course, it's the tech sector holding everything up in the NASDAQ, right? So last week's low tested in the overnight. If this is a true late spike, which I believe it is, because why? Well, did it or didn't it? It did not close in the late spike. So there's already a sense of rejection of lower pricing by the end of the day yesterday because the market did not close inside of the late spike. Now, the late spike today, to kind of talk about what the late spike is, forgive me.
You're good.
The market is at the end of the day extending the range, but doesn't have time to spend there showing acceptance. So we look to the regular trading hour open the following day. If we open in or below the late spike, that's acceptance of lower pricing. Obviously, we're already rejecting that level. The market is already back in range and back in value in the NASDAQ here. So the profile was a normal variation trend day, neutral stance. This market should be looking for new information and new levels with which to facilitate trade. That said, we do have speaking at 11, and that may be something that is it may keep some of the price action a little bit subdued until then. What else did I have to say here? Late spike rules, normal variation. We're good. Let's take a look now at crude. All right. Okay.
Got it.
Here's the daily scaling. Gotta scale this too. There's the volume. Look at that volume yesterday. We haven't seen that kind of volume in I don't know how long. Certainly not in the December contract because it's really just a fledgling front month contract. Traded up above the weekly kickoff high yesterday, and prior to the open, we were unable to maintain price above that. We do have some, upside movement here price wise overall in short time frame. But yesterday we added volume, we added open interest, but we were unable to show any sign of true acceptance above that 87.50 weekly kickoff high. I think we even had a reduction in inventories here in the U.S., and that didn't even do it. So you got to ask yourself, how good of a job is the market doing in this upward movement? It's not doing that well, is it? So weekly kickoff high is still going to be pivotal, I think, for traders, longer time frame traders to adjust inventory if that is in their cards. Again, we lost 2,800 in open interest yesterday on overall open interest of all of the contracts, not just the December contract. I collect them all because crude oil there's so much open interest way out into the future. It does make it a little bit more difficult to gauge the increase or loss in open interest or participation. So we're going to be looking at shorter time frame levels here. The market looked above 87.50, couldn't hold above it. Looked above 87.50, couldn't hold above it. Normal variation. What do we have as far as overnight inventory? Overnight inventory, we may be holding a little bit short. I think we were holding some shorts down here for sure that have already reconciled. So now we're kind of looking at the market opening below value. One of the things Deanna always mentions and always looks for is when the market opens outside of value, she will be looking for acceptance back inside value. We don't see any acceptance back inside value, especially during the regular trading hours. It traded almost right to the low of value and has moved lower. We have some visuals down below. We have, I think this is last week's high. We have a gap. Into this range, and then we've got a naked point of control down here. On the 30 session, the 200 session moving average would basically close this gap.
Okay.
To me, that seems to be the biggest visual target for price today, especially if we can't reaccept inside value from yesterday. All right, so let's take a good look at gold, because gold, I think, is in, yesterday we had the big breakout to the upside. It happened in the overnight session and we didn't get to necessarily participate in it, but what did it do? Well, we had a pretty good spike in volume. We've seen higher volume on this move to the upside, but we did add 7,200 new contracts, new buying, new business at higher levels. How good was the auction yesterday? The auction to the upside yesterday, I would say, was, probably pretty good. Higher volume, higher price, higher open interest, higher probability of continuation. There are several swing highs for traders to target. We've got this one, 1980. I remember that year. This one, 2010, I remember that year.
Me too.
And then, of course, this one up here, 2085, which I don't think anybody remembers that.
I don't know about that one.
But,
yeah.
So those are really the kind of main visuals that I would be looking for continuation. But we're on an inside day so far. Is this market going to just take a hangover day, as Dan likes to call it? Are we going to just kind of hang around and wait for whatever Chairman Powell has to say? Will our hero rally? Will our hero break? Stay tuned to As the Market Turns. As the Market Turns. All right. We'll take a look at the 30-minute chart here. We'll make sure everybody can see it. We've got today's card up there. Okay, now that's gone. Okay. We've got...
I would never cover your charts, Hogue.
All right. So we created another gap here. We've got last week's high through that gap. We've got weekly kickoff high through that gap. Here's yesterday's move above it. Most of the move was rotational. Yesterday was a pretty good range, pretty good range. But again, it did not really follow direct. Value moved higher. Price was outright higher. Value was outright higher. Volume was at higher prices. Open interest was higher pricing. Looking for this market to give me an opportunity on a pullback to try and find a way to get long, because the story is telling me that this upside auction appears to be relatively healthy. I mean, where does it break? Where is a good trade location? It's one of the challenges, Andre, for me, and I'm sure I'm not the only one, is when a move is already underway, how the heck do you get into it? How do you pay higher prices?
I know.
And we just mentioned this yesterday in gold, and we basically said you don't want to fight a directional market.
That's right.
If you can't buy it, think about what you don't want to do. You don't want to sell it. And
you don't want to sell into it. No, you don't.
Yeah, right. So, it was an hour after I said that where the high got put in, and of course we got a pullback. The markets love to make a liar out of me, but with the current market state, my preference, it would be much more find a pullback, find some daytime frame structure or some structure in recent history that allows me to limit the risk. I'm fine missing a move. What I don't want to do is risk so much that I take a big loss and then the trade plays out my way anyway. Don't do that. Don't do that to yourself. Do we have any overnight inventory in gold here?
What do you see?
We've got short, we're long. I don't see that there's anything that important that I need to rush into anything. Overnight was an inside regular trading hour range. The market is inside value. To me, the tea leaves are saying, be patient. Don't get chewed up too early here. We're waiting for information. See if there's an opportunity as the day goes on. And that's kind of what I'm thinking today. We're going to see how these markets play out, right?
Yeah. Hey, real quick, I just want to give you a shout out for your coaching session yesterday at the noon hour from noon to 1. I hope everyone was able to tune in. I think we're going to cut it up and post it onto our YouTube channel as well. But that was awesome. I tuned in for the from start to finish, and I know the people were loving it. And super informative, super helpful. And what you just went over here is basically what you explained and educated us all on yesterday. So if you guys have questions as to what John is talking about here on this opening call, we will post yesterday's group coaching session to the YouTube channels to check it out. But that was awesome stuff. I know that people were really loving it.
Thanks, Andre. Yeah, I mean, there were so many questions about even just some of the vocabulary we use to talk about volume profile and market profile. I thought I'd give everybody a chance to get a little bit more knowledge about some of the vocabulary and some of the features of the profiles. And, I thought it was a good session yesterday. Thank you, Andre, for that.
Yeah. That was awesome.
There's going to be more of this stuff coming at you. There's just so much information. It takes a whole long time to really become acclimated and to become proficient in anything that you're using, whether it's technical analysis, market profile, or tea leaves. It takes time, so we will be continuing to bring you to some more and more information over time. I'm looking forward maybe next time to talk about the auction process.
That'd be awesome.
And how the market profile graphic can help you with that. We do have a great session today. One of my favorites, Jared Tendler, is going to be with us and for power players. And we've got, it's just we had 3 books out, 2 of them on the mental game of poker. And then he's got this one on the mental game of trading. If you don't have it, you got to get it. There's so much actionable items and things that you can do that are going to help you get better at understanding your mind, especially as it relates to trading. You're going to have the opportunity to ask him all kinds of questions today. We're looking forward to that.
Yes. And on that note, Hogue, I'm going to be here today with you guys, kind of helping through to fill the vast void left by MP being gone. A few notes. First, for Jared Tendler, at some point, JD or James is going to pin in the YouTube chat a form. And if you have any questions for Jared about trading psychology or mindset stuff in advance, drop them in there and we'll try and get to those. Also, MP did leave us with some goodies. I'm surprised I haven't been paying too close attention to the chat. But I haven't really seen anyone pick up yet that at the top of the screen right now, we are showing the tilt live.
Yep.
So this is what I know about this. This is the Topstep Tilt free preview. What is the tilt, you ask? A real-time snapshot of the sentiment bias of all Topstep traders in simulated accounts. So the numbers to pay attention to there next to the product are the short percentage and long percentage. I need to clarify with Casey what average entry there is referring to, because of a few, I get if it was average entry for just the shorts or just the longs, but I'm not sure what average entry of both tells you. I'll get to the bottom of that. And then below that is actually a live look into our XFA leaderboard. So there's
awesome.
P&L, live P&L, and positions for that. So hope you all enjoy it. This is a preview. Don't know how long it'll last.
Awesome. Hey, so those XFA, those are actual open. Oh, wow, I just saw P&L change. Very cool. Very cool. Wow. Dope.
Real-time changes in P&L there, it looks like.
Sick. Wow.
Awesome.
Oh, yeah. Dope. All right, cool.
All right. Jack, thank you very much. Thank you all for being here. We're going to take just a few minutes to refresh our coffee. We'll get started with Fast Markets here in just a couple of minutes. We'll see you there.
Let's go.
All right. Welcome, everybody. It's time for Fast Markets. We're going to be checking out these markets, maybe taking some trades, looking for opportunities. I'm very excited, Andre, because we now have a preview of the tilt. What's the tilt? The tilt is an aggregate position of everybody in the trading combine and the XFA accounts. So it's going to be telling us basically if the overall trading community is long or short, and by what kind of percentage. And we're also getting an average entry, which is an average entry price, which is an extra bonus. So I'm looking forward to having that today. We do have a hole today. We're not going to have the benefit of Mr. Patak being with us. So we're going to probably be checking out the S&Ps a little bit more because, as you all know, the NASDAQ gives me heart palpitations. So we don't need that.
We're also going to have Danny joining us at 9:30 for an extended look at the crude market. We're going to have friends drop in along the way here.
Awesome.
Cool. A variety show, if you will.
All
right. Yeah, that's how cool is it that we're previewing that tilt for everyone. So you guys have been hearing Michael talk about the tilt, what the percentages are, which way people are leaning in particular markets. Well, now you're seeing what he's been seeing these last couple of weeks. So it's our little gift from him to you while he takes a well-deserved fall break trip.
Yeah. Yeah, he'll be back tomorrow, though, from wherever he is, right?
Oh, God, can't wait for that.
That's not going to be technical difficulties at all.
Well, internet dependent. We hope to have him tomorrow. Let's see what happens.
Yeah, we will see what happens. Something tells me he's going to be enjoying that beach.
Yeah, well, maybe he can trade from the beach. I know he's traded from airports before.
Sure has. I don't know if I recommend it, but he sure has.
I wouldn't either, but okay, we've got about 1 minute here before the open here.
Let's go.
Watch. I'm getting suggestions to take YOLO trades today in the chat, and I have a tendency not to do that, but we may see something here early this morning that we might want to be taking as far as the opening range trade. The opening range, if you were in the class yesterday, you know, is the first minute of the regular trading hour session. That's 8:30 to 8:31 in the equities, 8 to 8:01 in crude oil.
Yep.
And we are off here. Ding, 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 ding. We are off and running.
There we go.
Here's the late spike. If we were going to call it a late spike, we've opened above it, indicating potential rejection of lower pricing. I'm watching the opening range right now, Andre.
Yeah.
And it's only 2.5 handles wide so far.
Yeah, it is.
We're gonna to see how this plays out, and we've probably taken an opening range trade here this morning in the S&Ps, just because if the opening range is 5 points, your risk is about 7 points.
Gotcha.
And if it plays out, there's no telling how much the market is going to be able to move in that direction.
Gotcha.
When we are coming around to 831 here, we've got a five handle and a tick opening range so far.
Got nothing on tilt yet. For those that are asking in the chat, where's the tilt? It's at the top of the. We got to do it. Okay, see, we got a long bias in NASDAQ, 75%. It's coming across. Yeah, it's at the top of the screen. It's scrolling across. It'll be updating in real time. It's pretty cool.
Not up there right now, is it?
S&P is at 50. No, nothing's about 50-50. Now it's 60% long. S&Ps.
Okay, so we did take a look by one tick above the opening range. So I'm going to take a long here. Our risk is going to be, we are long at 43.51 half. Our risk is going to be down to 44. So I'm going to put a stop in there. That's going to be the other side of
I like that.
The opening range, and we'll see what happens.
So you get short or long, Johnny? Sorry.
I'm long.
Okay, you are long.
Yeah, we took out the high of the opening range first. So if the opening range is going to remain one extreme or the other, odds are it's going to be the low. So we'll see what happens.
Gotcha.
We're showing possible rejection of lower pricing with the fact that we've left this daily. Well, it's not even a true spike. It's more of a buying tail.
Huh? What's the difference?
Well, a late spike is when the market moves away from previous range and closes at the low.
Right.
This particular one looked lower, but didn't close at that lower level. It actually closed. Here, I'll show you.
That's a tail?
A kind of a buying tail, but is it?
Right.
So here's that late spike. This is on the profiles, right? Here's the late spike. M period extends. That's the 2:30 to 3 o'clock bar, but it doesn't close down here. It closes it right here. Right here. And where was settlement? 42.75, 42.75. Right there is where it closed.
Right.
So it confuses the caveman that I am.
It's all good. Right. Yeah. I see what you're seeing, though. Okay.
But if it is going to be rejection of lower pricing, we're positioned for an opening range trade that broke to the upside. And if it holds, I'm looking at a possible reacceptance of value, which could lead to a move to the upper end of value from yesterday up at 82. That's a pretty substantial move.
It is.
But we have to see, There's
only one way to find out, right?
Yeah. I mean, it's not looking real good right now. What did the NASDAQ do as far as the opening range is concerned? The NASDAQ opening range is the low of the session so far as well. Here's the late spike in the NASDAQ. So we certainly, if it was a late spike, showing signs of potential rejection of lower pricing.
Okay, we got tilt flattening out about 50-50 for NASDAQ.
50-50?
About 50-50-ish, yes. NASDAQ and S&Ps. Like you said, still the opening period here, so we'll see how this plays out.
Yeah, I mean, the market is really just kind of stuck here in the opening range.
I'm worried, not worried, but everyone's just going to wait around for Powell to speak today.
Yeah.
That's going to make for a tricky trade. But It's not the first time we've had to hold we've had our patience tested in these markets this week.
The NASDAQ has taken out the low of the opening range now, and the S&Ps have not yet.
Mm-hmm. So if it takes out the low, if it takes out the lows, what does that tell you? Is that acceptance to the downside?
Well, what we're looking for is the opening range to remain one extreme of the day.
Gotcha.
And it happens quite a bit from time to time.
Right.
I'll tell you, there are times when it happens a lot, and then everybody notices it, and they all jump on it, and then they ruin it, and it doesn't happen for a while, and then everybody abandons it, and then it starts to happen again. So it's very streaky. But the idea is it helps you limit risk because you're only taking the basically 1 or 2 points outside of the and I can show you examples where we could have risked 8 points to make 50, 60. I'll show you those here in a little bit.
35, 51 halves. Okay.
Yeah, the settlement for the E-mini S&Ps is 43.4275. 43.42. I'm sorry, quarter. 42 quarter. My bad.
Oh, good. I think we should also be keeping an eye on the 10-year Treasury rate. I know equities have been paying close attention to that as we approach 5%. Will it? Well, I don't want to say face. I know we don't like using the word resistance around here, but yeah, will it be rejected, or will we just plow right through it? So the Fed got to figure out this inflation thing. So, how married are you to this position?
I know the risk. I've already accepted it.
Yeah,
I've already accepted it. So here's what happens. Here's the opening range. Sometimes the market will come, take out the low of the opening range, hit all those stops that are below it, and then finally start to move higher.
Right.
So we've done that in the NASDAQ and in the S&Ps. NASDAQ is really kind of dragging us lower. We're probably going to get stopped out on this. And where is it going to get us stopped out?
The entry point.
The base of the potential late spike.
Yeah.
But we'll see.
NASDAQ is, good catch on that NASDAQ going lower, maybe dragging the S&Ps lower, test to settle. Yep.
Yeah, so it just came and got us.
Gotcha. Okay, cool.
Ooh. We're all right. We're all right. So now, I'm probably going to be patient, let the market kind of pan itself out, get some early extremes before I do anything else,
Right. I mean, I know what you were trying to do there, and we're on TV doing this trade. They want to see us trade, but it's hard. Like you were saying yesterday, it's hard. It's hard doing this trade on in front of people. I'm
getting used to it. That was just a kind of an early opportunity because we opened out of range and we opened in range, but outside of balance. The late spike, I think, is really what kind of put me in a mood to look for an opportunity early in the session. Generally speaking, I don't generally do that, but here's what I'm talking about as far as the opening range trade and how profitable it can be.
Yeah, let me see.
So here's Monday, Thursday. This is Tuesday. Market opened, left the opening range at the dead low.
Sure did.
It's a 36-point range. So if we get out at the high, that's 30 points. That's $1,500 per contract.
Yeah. Damn.
This was a day when the market, when it initially left the opening range at the high of the day, it was worth, we can definitely say that this was worth 2 to 1 by the end of the initial balance. It did come take it out later on in the session and then drove lower, right?
This week has just been,
Here's one of those situations where the market may have left this at the low of the day, then came back, took out the stops below it, and then finished the day higher. That's a 47, almost a 48 handle day. We could probably, if we were able to stay in, that's why I put my stop a little bit outside of the stops that we know are on the other side.
Right.
And if we were long that and we held and we had our stop in the right place, we could have, benefited 35 points on this.
Damn. Yeah, you sure could.
Here's another situation similar to that.
What day is that?
This was, we're going on dates now, the 9th.
Oh, okay. A couple weeks ago.
Right.
Gotcha.
Yeah.
These are examples of the opening range. I see. That's cool.
Right. So now it's had a streak where it hasn't been working much here. So it makes sense that there was a day this week where it actually worked very nicely. And I hate to use the word work, Because nothing works, right? I mean,
I know what you mean, though.
it either goes or it doesn't. Here's a big one. Even gave us 3-4 opportunities inside the opening range to get short on a 60 handle move.
Sure is, damn. All right, just a little tilt up.
It hasn't been very fruitful lately. Worst tilt now?
No, tilt's at 50-50. I guess to try and get people comfortable with what they're looking at across the top there.
Yeah.
There you go. GC, that's gold, right? And I am got the treasure. So yes, that's what's scrolling across the top. Keep an eye on that. If you guys have any questions, throw it in the chat. We'll be happy to help you understand what we're looking at. Here you go. Nice, good job, Jack. Well done. Or JD, whoever's pulling the strings behind the curtains there.
Nicely done. Nice.
Yes. What is Tilt? The real-time snapshot of the sentiment bias of all Top Step traders in sim accounts.
Yes, sir, it is.
So it kind of gives you an indication. I know Michael likes to use that for his entries. Sometimes he likes to fade it. Sometimes he likes to get with based on how the quote-unquote herd has been trading for that day. So do with it as you please. And, we'll all learn together. Maybe you guys have some insight that we haven't been seeing on how to use it. And we'd love to, we'll go back and forth and let's team trade this sucker. But right now it's pretty 50-50.
Mm-hmm. Somebody's asking if we look at view app, if yes and if no.
That's a question for you, John.
Yeah, I mean it's on these charts. It was requested that it's on these charts, and look where price traded to settlement and the VWAP, which is based from the overnight open last night. Mm-hmm. So a lot of people look at it like long above, short below.
Short below. Yes. People are asking what happens. Where's MP at? I see people asking. He is out of town for today. He's going to try to get on tomorrow, but we'll see if he's got a good internet connection or not. All right, he's at. All right, now we're at settle in the S&Ps, so we'll see how this dance goes.
Right, and
yes, we are.
Folks would be looking for opportunities here at VWAP. Do I take it? Do I look to take a long down here? Let's do it. We're gonna have a session in how not to trade today.
Hell, when the cat's away, the mice will play. Let's do this shit.
So that's going to take us through the VWAP, through settlement. We'll see what happens here. So we're taking, somebody who was saying I should take YOLO trades today. I feel like that's what I'm doing.
I think you are. It doesn't seem like there's a lot of conviction in this sell-off, so I kind of see that. We got tilt showing anything.
Yeah, I don't think there's a lot of conviction until, we got some numbers at 9, existing home sales, misleading indicators.
Misleading indicators. I love your nicknames for all the economic releases, by the way. You're subtle about it. You're subtle about it, so you got to be listening closely, but I got you. I got long from 42 and 3 orders. 42 and 3/4 I am long from.
Okay.
Tight stop, just below 6 handles. I don't know what I'm going to try to take out of this.
And you are our Arms of Orion composite operator. You're more than welcome to fade me. No problemo doing that.
Arms of Orion that's a hell of a username.
What was that?
I don't know.
Arms of Orion composite operator on the chat there. I'm fading Hogue. That is a hell of a name.
Delta's negative in the S&P is about 1,100 right now, so it's congruent with direction so far.
Okay.
I can't stop laughing at that name.
I mean, what do you want us to call you? You got me up there. Oh, great. You guys are updating it quick today. Good stuff.
There's a question here. Why do we like to buy into weakness and sell into strength? Why not sell weakness and buy strength?
On entries.
Yeah. See, if the market's directional, and I'm not going to be selling into strength. I'm going to be buying into weakness. I don't want to buy the high and then have to withstand a whole bunch of heat.
Exactly. But entries.
So, that's just, and, being a contrarian kind of trader, I'm looking for the extremes to fade those extremes, especially in, range bound days.
I was just going to say that in range bound days, Johnny, you nailed it. In range bound days, these markets have been stuck in a range for weeks, if not months. So I don't think there's a trend. I mean, hasn't been a trend in the last, I couldn't tell you. So yeah, basically these are range bound trades, looking for extremes, fading the extremes, looking for good entries.
Yep.
You said it, John.
Yeah. So
we're hanging around settle.
We're trying to find the low here. We've got a couple of things for us and against us. I mean, we've got settlement here. Settlement is the base of an assumed possible late spike, which is showing signs of rejection. We got the VWAP here, so I'm probably not going to hold this position into the economic numbers.
Mm-hmm. What do we have? We have something coming out at 9.
We get stopped out ahead of time, then I don't have to worry about it.
Wait, we got 9 o'clock. U.S. existing home sales. So be careful. Take note of that. Much it's going to actually move us, but you never know. If the number comes super out of whack, the markets will react.
It's the misleading indicators that I'm more concerned about.
Is that up there? Oh yeah, there is misleading indicators. They're still talking about that hot.
Go ahead.
No, I'm saying they're still talking about that hot retail sales number from the other day. Sometimes these numbers matter, but misleading indicators. I like that.
That's what we used to call it on the floor.
For sure.
There were always like nicknames for these things. Misleading indicators. Unemployment was unenjoyment.
Talking feds, talking heads. I like that.
Talking feds. Yep. So these are all just kind of vernacular from the trading floor.
Hey, question. So every time you see, I got a question. So every time you see October 19th on the calendar, it hits you, right? It means something to you, right?
Oh yeah.
We'll talk about it later, but I was just thinking like certain dates. You think it's 9/11, for instance. Obviously conjures up memories. For you, October 19th conjures up memories. No matter what, even if it's on a Saturday or Sunday.
Yeah. It was a really scary time, and those scary times have a very deep electrical charge in your brain, so
yeah,
it's you remember where you were on 9/11, you remember where you were when Kennedy was shot, you remember where, and this is just one of those things that's so highly charged in my memory bank that it's I'm aware of it days ahead of time. Let's see what we got here. Crude gold. I'm going to take a look at some of the other markets here while we get stopped out in the S&Ps.
Yeah, we are.
Yeah, right. There's gold starting to drive to the upside here a little bit. We got crude oil. Here we go. Oh, we closed the gap.
What do you got in gold or crude?
In crude.
Gotcha.
Yeah, we closed the gap, and that was it. We had gap, close, and run. Wow.
Damn.
Wow.
All you crude traders out there. Oh, shit, look at that. Yeah.
Let's close this back up. Here we go. And there's our gap. Now that it's closed, we shorten it up. There we go. Now we got a naked point of control up here, 87.06. Looks like we may be finally trying to reaccept value from yesterday. That's Deanna. She's probably thinking, if we accept, we get a decent upside move here.
Yep.
S&Ps. And we're stopped out.
Are you?
Yep.
Shit, I'm still in this thing.
0 for 2.
I know. We're trading like we're forcing these trades a little bit. I feel it though.
Of course.
Have to, right? That's what the people want.
Well, I don't see that these would be necessarily trades I would have taken, except for that opening range trade.
That one I see. How long did it take you to get used to trading on camera like this? Just out of curiosity.
I'm still not used to it.
I mean, neither, man. This is wild, but it's okay. It's cool.
It upsets me that the decision making that I've had for so long is being affected just because I'm doing this in front of people, but
this makes us better traders though. It will.
Yeah.
Makes you double check, triple check your thought processes.
Yep. Yeah. I think that I'm not sure, but I think this account has a $1,000 daily loss limit on it. So we can only do so much damage.
only a couple. Will MP be back today? No, MP will probably, he's trying to be back tomorrow. He will not be on today. I feel we're going to get that question throughout the day. But he is on a holiday for fall break with the family, recharging the batteries.
There you go. Yeah. We all have to do that. And he's been working so hard at TopstepTV and everything.
Eddie too. Yeah.
Yep. And Eddie for sure.
He says hi, by the way. He tried. We slacked a little bit the other day. He wanted to make sure I told everyone he says hello. He misses you guys, and he'll be back Monday.
Very nice.
Yeah, we'll get 3 amigos back: John, Eddie, and Michael, and everything will be right in this world again.
Looking for the tilt here.
Yeah, what do you got across the top? I got it here. 73% long bias in the NASDAQ.
You know what? Okay.
Seen that?
You know what I was just gonna say. One of the things that I'm noticing about trading on screen is it's made me a lot more risk averse.
Right.
Like that stop I just got hit on.
That was tight.
Was really tight. It was what, 3.5 points?
Yeah.
And I know that it's sitting there waiting to get hit. If I had a little bit more risk on it, we'd probably still be in that trade. I don't know if it's eventually going to work, but it's made me a lot more risk averse. Plus the fact that this account only has a $1,000.
We got to widen that baby up, man.
Loss limit, right?
Yeah. Where's Mick? Let's widen that sucker up. So, as always, people are asking about fire drills. Jack, do we tell them now or later? We're trying to hit 50,000 subscribers.
Well, after all of the fake subscribers or something that came in yesterday, I think we might have to we're going to have to reassess. We'll have to reassess. But yes, we're not done. We might be taking a pause today to reassess how things played out, but we're not done. Yeah, I know why you're laughing. I know why you're laughing.
I got this sweater on and I got the door closed because my son's home from work and I'm trying not to disturb him.
I like that cardigan, by the way. You look sharp.
Oh, thank you.
Yeah.
You know what? I've been long twice that I should have worn my upside cardigan.
What you got? You have one of those in the closet?
Yeah. From the Market Prep.
Uh-huh.
I have a particular cardigan that the people that watched it named the upside cardigan.
I like that. You got to bust it out tomorrow or next week.
Yeah, right. Well, yeah, I'm busted out at a good time, right? We got to save the markets.
Seriously. So we got nothing on tilt as of the moment. Well, yeah, flattened out a little bit back to 60-40-ish.
Next 6 minutes here before the numbers come out.
Oh, shit, that's right.
6 minutes. Delta about even on crude.
Got it.
Just about even in gold. The Dow just about even, 55% short. NASDAQ, where is it?
Where is the
Where
NASDAQ?
is it? Short, 33%, 66% long in the NASDAQ.
Too tight of an area for me to trade, says Roy Jenkins. It has been a tight range right now, for sure. And like you said, we got Powell coming out in a couple hours. Waiting for new information to enter the market. It's going to be probably slow up until then. See what he says. Powell's typically been one of the more hawkish members of the Fed. Obviously, they have a job to do. They have to control inflation, and we're starting to see a couple upticks in inflation. So it'll be interesting to see what he says.
60-40 long.
Are you still in there, Andre?
I am. Yes, I am. I'll let you know when I get stopped out or
Nice.
get the target.
What's your target?
Good question. Right now it's 49s. Basically, I just have a stop in. I don't, I want to go lower.
Don't you feel like sometimes if you do put a profit target in, the market runs away from it?
Hell yeah, it does all the time, John. All the time. I don't want to put that order in there, man. I don't
So you got
want to
kind of a mental profit target,
Oh
right?
man, I've had so many conflicting thoughts. I'm like, oh, the algos can see where my stupid little one line is and stuff like that. And oh yeah, I've thought about it all. But stop is it's a 6-handle stop that I have in, but upside.
See, that's a reasonable stop.
Yeah, for now, right? If we get some upside, we'll see. If stops go off, then I'll manually get out of the trade. What do you call it? You call it time? What do you call that, John?
Time stop.
Time stop. Thank you.
Yeah. Dr. VJ, right? If you put a stop in, they go find that too.
Hell yeah, they do. I know. But you have to just for risk control. But yeah, they go stop hunting, man. I swear, Hassan Hope. I swear they do. Yeah, man. These are the thoughts that run through a trader's head. But if you stick to your conviction, your analysis, usually it works out more often than not. So we got number in 3 minutes.
Yeah, we probably should have waited until after these numbers come out.
I know.
But would we be saying that if we had made money?
No, we were saying we should have been trading bigger.
Yeah. See,
Like you say.
We're geniuses because we made money this morning before the... Yeah.
Market don't want to budge. Market doesn't want to budge.
No, it's not going to do anything here. We got 2 minutes, under 2 minutes here before the numbers come out.
Yeah. I have to get out.
My dog Lacey, because I have the door closed. She's got one paw like stuck under the door.
I miss Lacey. She hasn't given us trade direction in a while.
No, right? But her favorite person is here today, so she's not missing me too much.
Your son or you?
Yeah. My son.
All right, another 2 minutes.
Crunch time, Andre.
I know, man. I'm probably getting out. No stupid shit. I'll let you know. I'm not rolling. Yeah.
You're going to get out before the numbers?
I am. Yeah, for sure. It used to be a rule, Topstep. I know we got rid of that rule, but it's a good rule. Sometimes you catch a winner, sometimes it doesn't, but I mean, I guess sometimes. And
The suspense is killing me.
I'm out. I'm watching the ticker. I'm out. It's basically a scratch.
Yeah, you just scratched it, right?
Market ain't going anywhere, man. Come on, let's do this.
Oh, you made a little bit.
$50, yeah.
All right.
That was a dip.
Here we go.
What do you got? When you see it, John, call it out.
It's going to rip higher.
I know it is, man. Watch me. Watch my mood change.
Of course it is. All right. I'm watching.
Lame ass number.
It is.
It is such a lame ass number. But.
Wow.
Existing home sales, a little bit higher, 3.96.
That number moved it within the same handle in the ES.
It did, man.
Thus is the power of the Powell.
It really is. He puts
Right.
he puts a trance on this market. Look at his tight range. This is
Still waiting for misleading indicators here.
Okay, Howard.
See if it's on Financial Juice.
That's the site I use.
Someone's asking how you can fake subscribe to YouTube.
Great question, man. Great question.
Honestly, I hesitate to even say how, just because
Then be a bit.
Yeah, let's not even put any ideas in anyone's head.
the big thing is we might need a delay, because what I think happens is that Google, YouTube flags things the next day or something, and then they get taken out. If, like, say there's I'm not going to say how people do it, but it's doable.
It is definitely doable. Maybe we'll have to do. We'll have to confirm the day after moving forward or something like that. I don't know.
Yeah, we'll figure something out.
Yeah, we will for sure. I'm sure Michael will have some thoughts too.
All right, month over month misleading indicators was negative 0.4%, looking for negative 0.4%.
Yikes.
It came out negative 0.7%. And what a market mover it is.
All right, I'm getting back in. Screw it. No, I'm kidding.
You are.
No, I'm kidding. Trade ran its course.
Wow. MP's definitely not here.
What I know. Scammer gonna scam. I'm kidding, John Jones.
All right.
I mean, we might just have to sit on our hands and do story time, John. I don't know. If something pops up. There's our opening card, yeah.
Yeah, we're going to do the quiz a little later today because Jared's an hour session. So
Oh, wow.
that'll be fun. If you haven't seen Jared before, he's great.
Yeah.
Great presenter.
Very cool.
Really cool guy. Really, really great book. Really great ideas. If you haven't seen him before, you're going to love him.
Awesome, man. All the guests we bring here on TopstepTV, it's been a hell of a week.
Yeah.
We got more on the way, too. I want to, here we go, finally moving.
And one more thing with the Tendler session this afternoon, it's different than the normal power players. It's not an interview. He's going to be doing a hour-long session where he'll take questions from the form we're going to pin to the channel and questions from the chat.
Yes, that'd be great. That's really cool. Oh, look at that. Submit your questions. That's awesome.
Yeah.
Oh, so it's like an actual session. It's like an actual session with them. Very cool. Look at that.
Yeah, I've got to get my questions in there. I got to get a couple of minutes because I always like to ask him a couple of questions. Maybe I just pop in at the end and ask him.
Pop in whenever, Ho.
Yeah, your questions go straight to the top, Johnny. All right, starts. All right, S&P's trying to tick lower. We're dancing around a little bit below settle. We'll see if they take the NASDAQ with it. Gotta stay patient. Hey, if we want, since we're around settle here in the S&Ps, maybe do a poll. Jack, I don't know what you think a poll if we're gonna be higher or lower than on the S&P since we're around settle. I'm trying to think of what a good poll would be at something like this, considering we're at a lull in the day and markets aren't really moving, and maybe get an overall sentiment as to where our audience thinks this thing might go. I'm trying to think here.
I'm kind of curious of something that, once we get the poll out, they get a lot of information on it in advance. I'm more curious of, like, say, the over-under on what the range of the 30-minute bar will be when Powell talks or something. So,
I like that.
But we'll save it for a little bit. We'll let the Tendler, we'll let it cook.
I like that. Let it
cook for a while.
I like that. Okay, cool. Yeah, submit your questions. That'll make the session much more fruitful for everybody. Because I'm sure, your question is probably being thought of by a few other people as well. So you're asking questions for the team.
Some of your questions somebody hasn't even thought of yet.
That's true.
It snowballs. Somebody asks a question, you're like, "Wow, I never thought of that," and then you get your answer.
Yep, one thing leads to another, and then you have a good healthy session going. So,
Yeah,
all right.
We have the best. We have the best people that come on here, don't we?
We seriously do, man. 18. We're lucky. Let's get this thing going.
Well, this is thrilling.
It's all good, man.
I would have much preferred a day like this on October 19th, 1987 than the day we had.
Tell me about it, man. Now, we got a second.
Let's
Tell me
get
about
into
it.
it. If nothing's moving, how?
Yeah, I want to hear about this. People love this stuff. I love this stuff. Tell me about
Story
it.
time. Story time.
All right. So
It was a Tuesday?
it started on a Friday.
Gotcha.
So, it's the Friday like any other day. Now, the contract was well, I'm trying to think of it. It was the big contract. So one handle was $500, but we traded in nickels. So like if you were quoting the S&Ps that morning, we were probably trading in nickels. It was even 05, 10 bid at 15, 10 bid 15, 15 bid at 20, 20 bid at 30, 20 bid quarter offer, 20 bid quarter offer. This was before they split the contract. When they split the contract, it was $25. It turned into $250 a handle, and we traded in dimes, which kept the tick size the same. It was $25 ticks.
Yep.
So when you go back to 87, that was the big contract. There's 20 ticks per handle, and it's a $500 handle. So that's like, well, a mini is a fifth of big contract now. Right. So a mini would be, what would it be? 2.5 would be a fifth. It would be like a micro. It would be a tenth of the previous handle of the previous contract. So never mind that. The risks were immense. So the day started out just like a normal day. I mean, we were working, and the market started breaking, and pretty soon, like, all buy orders were getting canceled. Everything was coming in on the sell side. The market really just kind of tanked in the last 3 hours of the session, if I'm remembering right.
This was the day before.
Yeah, this was the Friday before
Friday. This was
Black Monday.
Okay, so it was Monday. Okay, so it's gotcha.
Right.
Through the weekend.
So, we're all wondering what the heck's going on. I'm working for a broker. I'm facing out. I'm getting orders flashed to me, though. The brokers are trying to fill them, but there's nobody that wants to buy anything. So you're offering the price lower a handle at a time. So that's a $500 tick. Every handle you have to offer down, that's $500 every contract.
Right.
So, by the end of the day, I mean, there were like locals that didn't want to execute their own trades. They executed through brokers, and there was a woman, Mary, who used me and used my brokers to execute, and she was short. She was short coming.
Oh wow!
And she's asking everybody, what's going on? What's going on? Do I cover? Well, I had heard. I don't know who told me this, but there was I think it was Prechter had said that by the end of the day on Friday that it was going to continue to the downside on Monday.
Huh.
So I told her, I said, hey, I just heard, I don't know how reliable this information is, but Prechter came out and said that, he believes that this is just the beginning of this. It's going to go a lot lower on Monday. So she held on to her position over the weekend. She was short. She had a big, she had a pretty good profit in that. She held it over the weekend. Now, by the end of the day on Friday, we had done so much business, and you had to check your trades. So let's say, Andre, I sold you 10
Mm-hmm.
and you said, yeah, I buy 10.
Buy a 10.
Then you'd call the trade into the exchange. You say, hey, we evens traded.
Yep.
And then we'd go back to each other and I'd say, I'm checking. I
Yep.
sold you 10. And you'd say,
Checking.
yeah, I bought 10.
Yep.
We're so busy. Nobody had the time to do that. So you're just making trades with people that are across the pit. You're buying and selling hundreds of contracts. The risk in this is so just exorbitant that I don't think most people recognize, even the people that were doing it, the amount of risk that they were taking. Personal, financial disaster.
Yes.
Or a complete windfall, right? So at the end of the day, everybody just like stopped and sat down, and those that smoked lit cigarettes right on the trading floor. I wasn't allowed, but you're gonna do it now, right?
Yeah.
So we all went and we checked all those trades. Now the trading cards, they had a dupe. They had a duplicate on them. So let's say I sold you 10. I write down 10, the price, Andre, and then you'd pull off the dupe and stick it in your pocket and then send the card back to the clearing.
Yeah, the dupes, man. I forgot. Yeah.
Right? So
Yeah.
nobody left the floor, I think, until probably 11 o'clock that night.
Are you serious?
Yeah, because we were all
shit.
trying to double check all the trades that we had taken. And we're talking a stack of dupes like this, and then the paper dupes as well, because we're filling paper and doing arbitrage. So we have all this paper and all these trades on it, and we have no idea that any of them got checked.
Oh my God.
Right? So everybody's like, nobody leaves. Let's like meet up and check all these trades. Let's check all these trades. So it was like 11 o'clock at night, and there were a few out trades that were discovered, but you never really know until Monday morning.
Yeah.
And there was nothing you could do about it anyway, because the markets were closed. They're not going to open on Sunday night in 1987.
No.
They're going to be, there's going to be a lot of crying on the floor on Monday morning on the open if this thing continues to go lower and you're stuck long or you're not short enough, right?
Yep.
So I think we left at like 11 o'clock. I don't think I really slept. I don't really think I really slept over the weekend. I know I didn't sleep Friday night. Saturday night, maybe a little bit, but Sunday morning we got the call. There's an early out trade call, 5 a.m. Sunday morning. So because all of the trades had been key punched and they were now part of the computer, so the trades and anything that didn't match up would be an out trade. Either you thought you sold 10 to somebody that didn't buy them from you, or there was a price discrepancy, or even worse, you'd have a buy versus buy or a sell versus sell.
Yeah. I
sold you 10. You thought you sold me 10.
No,
now we're short 20 contracts. What do we do about it? So we had to go and do an early out trade call on Sunday morning. That was like till 1 o'clock, 2 o'clock in the afternoon. Then they would re-key punch all this stuff. And then Monday morning at 2 a.m. after punched, everything, more stuff got matched. And then, we had an early out trade call on Monday morning. Damn. And guys were just literally taking their cards and going, okay, what are you into me for? All right, I'm buying 10 here. What are you into me for? Okay, I'm buying 10 here. What are you into me for? I'm buying 10 here. What are you into me for? All right, I'm selling you, 25 here. What are you into me for? 5. They would just take the other sides of those trades.
Just whatever.
Just to get them cleared up.
Damn.
Just to get them cleared up. And the amount of losses and the amount of risk that these guys were taking was, it was hard to even hear the market, because that Monday, we're looking at a market that pretty much trades every tick.
Right.
Even, in volatility. But think about the E-mini S&Ps trading, let's say they're trading 43.48. bid at 43.70.
That's insane. How do you trade? How do you make it? Yeah.
There were a lot of fights because the locals thought they were getting trades, or brokers thought they were getting trades at handles that were, we're talking tens if not hundreds of thousands of dollars difference.
Yeah.
So and your customers are going, what's my fill? What's my fill?
Yeah, my price.
And you're trying to talk to the guy that you just traded with to make sure that you agree on the handle, because otherwise it's going to cost 100,000, a million, whatever.
Dude, you guys didn't even know what prices you were getting filled at.
Sometimes we didn't. Sometimes we did.
That is insane.
Or there was a discrepancy that we had to figure out before we could tell our customers because it was going to cost somebody $100,000.
Yeah, it was.
Or more.
So, okay. So, all right. So we got all these out trade calls. So Monday morning, the opening bell rings. You guys know that the hell's about to break loose, right?
Yes.
Damn, man.
Yes.
Was there a bid to be found in the market?
Well, I mean,
who's buying? Like who? Sorry, say
it
again.
wouldn't be, but there were some big locals in there that they would let it drop, and they would see, there's probably 200 to sell in the pit. Buy them.
Damn.
They take them all. And then all of a sudden, there's no selling. And now, everybody that's already short is saying, "Oh shit! Now I got to cover."
Right.
So they rally the freaking market up.
Holy moly!
And then the broker, the locals, the big locals would sell it all, and wait for the market to either really rally, and they'd see 100, 200 people, 100, 200 contracts searching for offers. Sell them, sold.
Oh shit!
Now there's no buying left. So the market drops. There were guys. I heard stories that there were a few private jets, like in the 2 weeks after that flew to Switzerland.
Nah.
Put the money in a Swiss bank.
So just the chaos continued throughout. I mean, it was just mayhem all day. I mean, was there limit down? How was there? There's no circuit breakers back then?
There were no circuit breakers.
No shit.
No circuit breakers. Not even in the pit. You know how the pit had railings?
Yes.
They called them wave breakers.
Yeah.
They weren't there. So, if somebody's like shoved one part of the pit, everybody would fall out of the pit, jump back up, and run.
God, that's so cool.
Back.
There's got to be footage somewhere of that day on the floor, the trading floor, right?
Pardon?
There's got to be footage of that day on the trading floor somewhere. You can see the madness.
I mean, there were some still pictures because the press got into it and they came in, but we didn't have cell phones with movie cameras in them.
Right.
Matter of fact, you weren't really supposed to bring a camera onto the trading floor. It was it was against the rules to be taking pictures unless you were press.
Unless you were press. I was going to say, because I've seen the news. I mean, Bloomberg, Reuters, I've seen them on the floor before.
Yeah.
Yeah.
They love taking pictures of me when I looked angry.
You have a couple famous ones out there.
Yeah.
The one with your hands on top of your head. What is that picture from, by the way? I'm sure you've told the story. I just don't know it. This one where you're like this.
Yeah.
Yeah.
I've got it up on my wall here. I think it was in 2000 something. And the market was at risk of putting in new all-time highs. And I was relatively confident that was going to happen. Well, it didn't. So they got that picture, and the headline of the picture is "Rats. Markets disappoint again."
And sure enough, so you got memed. You got memed before there was memes, John.
Yes, I did I got memed, right?
You were a meme before there was memes. That's hilarious.
I'll see if we can find that picture at some point. Just put out the request.
That's a good one.
Going back to Black Monday, my understanding is, because I've heard you talk about before, is that part of the reason things went so off the wall is because just no one knew what the positions were. So you just had to keep selling, I guess.
It's insane.
Because by the end of the day, it was down 20%, which, if we
Get
talk about
back in there and sell.
yeah, if we talk about the ES today, that'd be like a 900. There we go. Hoag's got it.
Yeah, there it is.
Hoagie
Rats.
Tendler.
Look at that.
Yes.
Oh, that's
Rats.
money.
So that was 2006.
That's a great one. What is that? What newspaper is that? Trib?
Sun Times.
Sun-Times?
Yeah, the business section of the Sun Times.
That headline, "The Rats market disappoints again," is such a Sun-Times headline.
Yeah, it is.
Right.
It really is. Oh, that's pretty good. Good job, production. Getting that up quick. Nice.
Well, that was Hoag doing it.
Yeah, it's me.
Oh, that's well, very nice.
Yeah, I am not an embezzler. Don't get any ideas.
I know. I saw that.
But it's kind of funny.
That's a badass picture. People are digging that, John.
Cool.
Yeah, so I don't know if I finished it, but it would be a 900 point drop in the S&P today. But now we have the circuit breakers. They're easy to enforce at what? 5, 13,
5, 10, 12 or something like that.
I always forget what they are because it's been so long. I don't think we've had one since COVID time.
COVID.
Then I could rattle them off.
COVID. Someone out there will know. I know 12% was one of them. That was so wild. How much did? Yeah, John. They want to know how much did the woman that was short. You ever find where she covered?
I don't know.
Was she one of those private jets going to Switzerland?
Well, she was kind of a private jet girl or before that.
Nice, very nice.
You had to have some serious money to hold a position over the weekend in a situation like that. And she had some real deep intestinal fortitude, 100%. And she tried to give me like a big fat envelope a week later just to say thanks for telling me that. And it's illegal to do that. And I didn't want any trouble. I didn't take it.
Yeah.
Yeah,
Thinking back, I probably should have.
And you never would have got caught, man.
Right?
Yeah.
Right?
because remember too, and it's been a while since we've seen this going back to COVID, is, how quickly did they change the margin requirements as quickly then as they do now?
Well, I mean, it wasn't, the risk management wasn't what it is now, right?
Yeah.
Back in 73 in the big grain days, clearing firms' books were about 2 weeks behind. So you could have a limit position for 2 weeks before your clearing firm would figure it out.
Unbelievable.
Now at this point, they were everything was punched, everything was settled that day, but not until the end of the day.
There we go. Yeah, 7%, 13%, and 20% are the circuit breakers. Thank you.
Right.
Yep. We saw 13% during COVID. I don't know if we saw 20%. Did we?
No.
We saw 13%.
Yeah.
That was wild. A lot of money to be made then. So, okay. Hey, so John, so what happened on the Tuesday? The following day? Everyone was just like walking around like zombies?
It turned out, over the next period of days and weeks, the bid and offer started to come back, kind of to reason.
Yeah.
By Tuesday, I think we were in pretty much 5 and 10 handle differences between the bid and offer. By the end of the week, things had settled down. The one thing that it did do to the market was, for the next 2 years, it was really quiet. It was really dead. There were a lot of folks that were used to trading a busier market that weren't able to withstand the slow markets that kind of ensued after the crash. It got real quiet for a couple of years.
Man.
So the people that were really just kind of counting on volatility and getting the edge on the bid and the offer,
right.
People that didn't actually know how to trade really suffered during that time.
Yeah, I can imagine. Damn, dude. And how old were you back then, John?
In 1987, I was I was 2.
I'm like, hold up, I was doing now. You were just a young pup, though, just a
I
clerk.
was 23 years old.
I bet, yeah.
I was 23, and I had started like going to art school and working on the floor, and I apparently had an aptitude for it. Whatever. I've never even applied for a job there. I never even interviewed for a job ever, pretty much. I got the job as a runner and just kind of learned everything I could, moved up to a phone clerk, moved up to an ARB clerk, moved up to a deck holder in the lumber pit with Jack Doherty. I mean, he was in the lumber pit too. And then got a job as an ARB clerk and a deck holder in the S&Ps. And then, I actually went to the Mid-Am for a year or two.
Mid-Am. Wow. Yeah. I forgot.
Which is a kind of a mini contractor of grains. Then I went back to the Merc and I got hired as a proprietary trader there. Did that for a while, and then just backed myself and got married, had a couple of kids. So
they got in the way.
Yeah, no, they didn't get in the way, but I had offers from friends of mine that had desks down there to fill their orders. So the order filling, while it was still very, could be very risky, the order filling niche, at least you were getting paid, right? I was getting like $1.50 a contract if I filled 2,000 contracts. I made $3,000 that day. And as long as I didn't mess anything up, it was guaranteed money, and I was still able to trade NASDAQ from the S&P pit because of text messaging had come out. I had a friend that worked. He was a broker in the NASDAQ, so I just send him my orders on text, and runner would bring the card.
That's awesome.
So, that's kind of the story about how I ended up where I am. But I could have, and you'll probably smack me when I tell you this, Andre.
What's up?
I could have used my dad's influence at the Board of Trade to give myself a much bigger leg up in the industry.
Yeah.
But my brother was at the Merc, and I was a hard-headed kid that had to make his own way, right?
Yep. Doesn't surprise me.
If I had been smart and said, well, Dad's at the board and he knows everybody and I pretty much know everybody, it'd probably give me a pretty good leg up in the pit there, right?
Yep.
No, I gotta go to where they know nobody and fight my way through it. But at the end of the day, it's turned out all right. I'm happy. I love what I do. I love Topstep and the opportunities that it provides to traders.
Yeah, man.
Being with, talking to, and so every day when I sit down to work, win or lose, I love what I do.
For sure, man. They love that was awesome. I know. Yeah, they love you, man. When you were gone last week, dude, it was like, "Where's John? Where's John?" Like, he's coming back, man. He's coming.
How many people do you know that have their own T-shirt? I didn't know this existed. James just sent this my way. You've been immortalized in a T-shirt.
Yes. Sit shorts.
So I think we're gonna bring in Dan right about now and get back. We're gonna talk some crude. I think Dan actually. Let me put this on here real quick. I think that Dan actually has a position on too.
Nice.
Or he did.
Equities are starting to take a peek to the downside here. See if there's any follow through.
All right. Well, let's take a quick break, as in like 30 seconds, and like 30 seconds, and we'll bring in Dan.
Okay.
on.
What do you stand for, Danny?
There he is.
I don't know these days, Hoagland. I got nothing.
What up, Danny?
Hello, Andre.
Let's
Good
see
to
what-
see you in here.
Yeah, it's our first time doing this, I think.
I think
On
so.
TV, yeah, it's very good. What do you got?
How you guys doing this morning?
Slow, man. Just watching paint dry all day, doing some
We
storytelling.
over traded this morning and took a couple losses.
That'll happen.
Yeah.
That's life, right?
Yeah, I mean, we're trying to force it a little bit. What do you got going?
Well, I am currently long crude oil.
I see.
I took a long after we closed that gap yesterday. In the middle of the night, we completely closed that gap. That told me, okay, we can maybe continue this move to the upside. So what I was looking for this morning was seeing us get inside yesterday's range and value area from the 24-hour session that I look at, or the full session that I look at. We got inside there. I went long at 86.66. I'm looking for this pop to take off here on this new candlestick. If it doesn't, I'm going to be a little bit less aggressive and be ready to peel off. So got a few cents in it right now. Definitely want to see this thing continue to mark some highs here on this candlestick now that we've rolled into a new one. I look at the 30-minute pretty closely on that. So that's what I'm looking for.
Do you get it all with you're long the 3-lot, correct?
Yeah, I got a 3-lot on right now.
Do you get it all at once, or do you scale in and scale out?
Andre, it just depends on the day.
Gotcha.
It depends on a lot of things.
What about today?
Now we're back at even. So I'll usually start, put a little bit bigger position on. I'll go bigger than 3. So, sometimes I'll run up to 6 or 9.
Look at you playing size.
But I'm just trying to get into the trade. I don't want to miss a move is usually my approach.
Right.
Don't want to miss something too aggressive now. We're getting pulled back on here right now. If this thing starts getting much lower, if we see this thing pull back into, 86.50, that's where it's going to start to tell me, maybe this is rejection up here and this market might want to rotate back down towards overnight lows. So watching it closely, I'd like to see it pop. I'd like to see it take off. I'd like to get paid a little bit.
There you go, right?
Hey, that's the name of the game, right?
Yeah, I guess
Yeah,
it is.
absolutely. If I can answer a question from the chat here, Brian Overcash was asking if I know Pax. I know Pax. As a matter of fact, he took my job as a deck holder in the lumber pit like 2 people after I left.
You were in lumber?
We know Anthony Crudelli for sure, and John Wolkowiak is sometimes even lurking behind the scenes here on TopstepTV, and he's been kind of a frequent flyer on Make Hope Money and the Market Prep. So yeah, I know those guys.
Dude.
So Dan, we'll let you watch your position, but we might switch over, John, to the NASDAQ. Just tested that big fat round number.
Yeah, I know Netflix is taking off right now, right?
Well, that's one of our stories we're talking about later. They're
Ooh, are we?
Did I get ahead of things?
Ooh, sneak peek, dude.
No, you can talk about it now.
15,000.
Oh, 15,000? Yeah. Oh, this would be interesting.
Yeah, Dan Riley was a client. It was a customer of mine. I know Dan. I knew Dan pretty well. Haven't talked to him in years, but
How about interest rates, guys?
oh my goodness.
And the yields?
Money's expensive, man. Money's expensive. Oops.
So somebody asked earlier in the chat of why we call points handles, and I know for me it makes more sense because I used to trade bond futures, and say in a ZB there's 32 ticks in it, right? So you stay a long time within one handle, so they don't change as fast as points in the ES or NQ or something like that. So we said handle to denote the first 3 numbers, the price that wasn't in ticks, and that's, I guess, carried over to people trading the ES as well.
It's just a way to shorten up the price, quoting the price, right?
Right.
Yeah.
Right.
And it delineates a lot of things, right? You can look at it in crude. You can call them dollars. You can call them handles. You got 100 little ticks inside there between the movements. I think it's just commonplace. Here we go. Crude oil starting to pop. Come on.
Are you cheerleading?
Yeah, I cheerlead all
bounce
the time.
off that 50,000 too.
So I used to, I'll tell you guys will laugh. I used to sit when I was outside the pit or sitting on a screen all day. I'd sit there and I'd like treat my dome on my computer screen like I can touch it and I could move it.
Yeah.
Like, come on, go. Or if I'd stand under the TV in the pit, I'd like blow on it. I wanted it to go. Come on.
I've seen that. Wait, how did that work out, Danny?
Believe it or not, maybe it's superstition, but it worked.
Let's do that shit right now, then.
That's what I'm doing. Come on, baby. Come on.
I like to tickle the offers above price to make it go up there.
Oh, there
They were
you go.
tickling them right there. They were tickling them up there.
Play that bounce.
That's pretty good.
It'll play that bounce.
What's
You
your
gotta feed
time?
it one every so often, you know?
What's your time frame like for that oil trade, Dan?
So my time frame was I needed to see it turn up pretty quickly, which we got in, and the market started to move. I need to see it continue to mark some highs here. I'd like to see it check the check the opening high here shortly. We're starting to pull back on me now. So we're starting to see this thing really struggle to make new highs. It seems like the sellers are starting to overpower. That's kind of what I'm recognizing.
You peel one off.
That's kind of what I'm thinking, Hoagland. It's kind of what I'm looking at right now. I'm honestly thinking about peeling the whole thing off with weekend volume coming in on the last candlestick. Week volume coming in right now.
You got the chart up. Sorry, I'm not looking at it.
Yeah.
Oh, there it is.
We're out, guys. I took it off. I don't like this. Where did I get out? Sold it off at 82. So go to $480 on the trade. So I got out at 86.82. Made $480 after commissions. I don't know what it turned out to be.
How long were you in that trade for?
25 minutes.
Yeah, so it's slow in oil too. Everything's
I think there's a lot of just uncertainty out there.
there
Right
is. There is. That's what's kept us in this range. I think is the uncertainty. We can't pick a direction because we simply just don't know. I'm sure.
That's where trading gets fun too, right? Like when you're trading a little bit of skepticism, it's moving a little funky. It's forcing you to make some quick decisions, think on your feet a little bit. And here we go. Of course, crude oil is starting to pop again as I get out.
Of course, right?
But, FOMO, it doesn't matter. I'm out. I made money, $480. That's 2 and some change on cable bills, so I'll take it.
There you go. There you go.
Cable bills.
Couple tanks of gas in that truck.
Dan likes to equate profits in futures to how many cable bills he can pay for.
Hey, it's important to me. I want to see how many times I can pay for my cable. Like those are like, a car payment or whatever, or mortgage or rent. Those are things you got to pay for, right? That's a necessity for a lot of things. Maybe a car payment is not necessarily a necessity, but for me, that's a necessity. I need to have a car.
Nice
I
job,
don't look at those as like. I don't look at that as this like thing that I can risk. Those are things that I have to have. I have to cover. I got to put food on the table. I got to have a roof over my head. Cable bill, I don't need that.
Don't need it, but kind of.
Kind of love it.
Yeah.
Kind of love it. So that helps me frame out what I look at in a trade. If I can make a few cable bills every day, life is good.
Hey, Danny, got a question here from Blue Gator for you. Does the FOMC decisions or CPI impact crude at all? Or is it pretty strictly the inventory news that impacts crude? Good question.
Great question. CPI definitely does, because that's talking about what inflation and what the U.S. dollar is doing.
Yep.
So if the U.S. dollar is shifting, the value of crude, which is based in U.S. dollars, will try and adjust to that. So CPI for sure. FOMC, I don't see as much reaction. It's 1 o'clock. Crude oil is pretty much done there. There's not any action going on. Maybe if it's a wild number in the crude, in the FOMC, it could have a small impact. But FOMC is not one I pay too much attention to for crude, but CPI definitely.
CPI for sure.
The FOMC affects everything. I think what Dan, and correct me if I'm wrong, what you're saying is that it's not some number that you're looking at as far as like trading around crude, because it's indirect in some ways. Like inventory is directly on crude. The FOMC is going to affect obviously bond yields, the dollar, and all those things. Especially the dollar, as mentioned, all things the same is going to affect the price of crude because it's in dollars.
Correct.
Absolutely.
Dan, earlier when you're getting out of that position, I nearly pulled the good, bad, and ugly and was going to say, if you're going to trade, don't talk. Because I was worried it was going to come back down. You know that quote, right?
Hey, Jack, real quick. You're saying you got robot voice going on.
Yeah, you got robot voice.
I don't hear it. You sound good to me, so I'm not.
You sound good here too, but apparently
you sound great here.
Okay, maybe it's just through the YouTube. I'm not sure. But yeah. Sorry, guys. Thanks for letting us know.
Yeah.
All right, here we go. Now we get the pop and crude as soon as I get out. You know what? I don't care.
Hey, come on. You're up $500, man. It's good.
I needed a good trade. I'll take it. Not gonna sit here and stress over something small.
No, man. Thanks for hanging out with me.
I'm off work tomorrow, so today's like a Friday.
Look at you. What are you doing tomorrow?
Real exciting stuff.
When are you moving?
Old doctor and check out my ticker.
Oh, good. Well, don't trade NASDAQ before going to that. Did you move yet?
No, the move is in a week and a half.
Oh boy, exciting.
Be a Chicago resident on Halloween.
Boy, it's too bad I'm busy that weekend.
Me carrying shit for other people. Those days are long gone.
Hey guys, how's my voice?
Sounds good to me. Ask. We'll hear from YouTube.
Yeah, we'll see on YouTube. Apparently, gentlemen, some trading in some U.S. stocks or some UK stocks has been halted. Oh, they're investigating an incident. Only the FTSE 100 and FTSE 250 and IOB securities are trading. Something unusual there.
Boy, man, I just went back to the 9/11, the theme back then. If you saw that headline back in 06, 05, it was just sell anything you could. I mean, that's where my mind took me. Doesn't say what the incident is it?
No, I'm just reading. I saw that somebody was talking about it in the chat here, and I just went on Financial Juice. That's all I have on it right now.
Cool. Yeah, thanks, team. Hey, put your trades in the chat, too, so we can see what you guys are doing. Get some trading ideas here, if there are any. Obviously, we're playing the waiting game till Powell.
Yeah,
it's gonna be a freaking dud, man. I'm telling you.
We should have had that. We should have had that plan earlier.
Yeah, right.
10-year yield on the cusp of 5%.
Let's just do it.
Right.
They don't need to raise. They don't need to raise rates because the yields are doing all the work for the Fed.
That's actually what they're tking.
Also, I think they are. This is making it easier for them.
In the NQ's moving.
NQ is moving. Is this off the London?
Pull that bad boy up, Hoagland.
NASDAQ.
Yeah.
There it is.
It's long for 15,000.
It's on there for Michael.
Long for 15,000. Nice entry.
15,000. Big fat round number.
Yep.
BFRNs, man. Gotta love them.
What's F? Oh, fat round number. For whatever reason, Santelli was talking about fat round numbers today on CNBC, about 5%. Just a magnitude.
Those were one of my funnest things on the floor when Santelli would get into like his rants or whatever.
Oh, yeah.
You just sit and watch and you're just like, I love this.
He started the Tea Party.
He's on CNBC sitting here with a piece of, a scratch piece of paper and a marker drawing things up on the floor. I loved it.
Yeah, that guy's a legend.
Hoag's going to take a quick minute or two break here, so
that's cool.
Party going.
That's cool. Sending questions. Yeah, everyone sending your questions for Jared for our session later today. That's going to be some real valuable stuff, man. These power players we've been trotting out there this week. Where else are you going to get that?
Not many places.
No.
Look at this thing pop.
What's popping? Crude or?
I'm looking at the old NASDAQ. Crude's breaking down on me, so. we're seeing weak volume come in on this up push on the crude oil. So I think my out was actually pretty good. We're seeing a little bit of rejection up here at the 80 handle, or not 80 handle, but the 80 cent mark. And then we may have some rotation to the downside. I struggle sometimes to trade the short side after market's been trending a little bit. So I tend to have to take a little bit to flip the side that I want to buy. I'm not hugely active throughout the day in any market. So if direction keeps shifting regularly, I'm not trying to, squeak out 10, 15 ticks here and there. I'm looking for bigger moves. So sitting on the hands right now. I don't know. Maybe we'll find another short. Maybe we'll find a short opportunity to come up here in a second.
Man, it's been a light day in the chat. Hey, let's get those likes up and subscriptions up too, guys. If we can get that going. Real subscribers only.
Real subscribers
Real
only.
subscribers only. Just click subscribe. You don't need to do anything else more than that. We kindly thank you for it. But we want to keep this thing growing. It's going well, and we wouldn't be without you guys. But let's keep clicking that subscribe button. Get those likes up and keep sounding off in the comments. You guys are doing great at that. There you go.
Also,
Boom.
thanks to everyone in the comments for pointing out when someone gets that robot voice.
Yeah.
We're trying to figure out what's doing that because
That's right, Roy.
we really can't. It just happens randomly and we can't hear it. So I saw someone comment, "Don't let people speak with a broken mic." It's like, okay, yeah, we won't, but we just don't know. We don't know until you good people tell us.
Keep MP off the show. I don't think MP is going to be off the show. I think he's here to stay.
This is the microphone that's been having some issues.
Everyone's randomly will have it's like a gremlin gets in the internet or something.
Interesting.
It's a persistent error. I don't know if we're gonna have to switch the software we use or something else, but it just happens randomly. Like I restarted my whole computer this morning, so that usually solves it. But
Bring Robot Jack back. They want the
yes,
robot.
exactly.
When we first started doing any sort of live streaming stuff, I had a little mixing board that I could edit people's microphones to have certain voices to them, like overlays. I don't know what the right term is. I would do it every so often. We had the echo, the deep, the high pitch, the robot, you had one that was like radio. It was kind of fun. That was a long time ago.
It was. Are we trading? Man, I'm trying to trade, dude. Trust me. These are the days.
All right.
What, you got something?
I'm looking at crude oil here. I know we got Hoag's chart up on NASDAQ, but I'm looking at crude oil. We're starting to reject pretty good here at 80. You can't make much of an attempt to stay above. I may be looking for a short here any second.
Okay.
So we'll see what comes of it. Keeping a close eye on it.
Sure. Yeah, equities, man, it's just been thin. I mean, not light volume. If we wasn't doing this, it'd probably be the day you come in late or later. You'd probably show up around 10 o'clock in the morning. So you wouldn't even be tempted to come trade this chop and then get your prepping for Powell. And then all afternoon we got all the Fed speakers this afternoon. I hope they're all on message and saying the same thing, which they haven't been. But if they're coming in with opposing messages, some hawkish, some dovish, some on pause, that's just going to make for a mess of a trade. This might be one of these days where you might not make a trade. I got made one trade today. And damn, it's boring.
You got to keep that in mind, right? If you're trading a product like a treasury product or an indice product right now, if someone in the Fed, Powell or anyone is speaking, just watch what you're doing. Because they could change one word in their message and it instantly changes the whole market state.
Yeah, also keep in mind that these algos and HFTs they're scraping the tickers for certain keywords they're looking. So obviously Powell comes out, all the headlines come scroll across the ticker or Bloomberg, whatever your news service is. These HFTs are scraping that, looking for keywords to change, pause, hold, inflationary pressures, increasing, things like that. So when you try to trade this stuff, you got to wait. You got to wait and see, basically. Roy Jenkins, how long have you and Danny known each other? Danny, how long have we known each other?
Gosh, 10 years maybe?
10 years now, yeah, 10 years.
9 years, something like that. I've known Andre for a long time.
Indeed. We're aged like fine wine together. Not like avocados.
Remember when we had more hair up here and less gray in here?
Dude, I'm starting to get the grays right here. I'm like, come on, dude. What's up with
Yeah,
this?
I got him coming in on the sides. Got to
What's
keep
up,
the beard
dude?
short.
John.
We're catching up to Hogue.
Yeah. Yeah, it's getting a little gray.
Yeah, a little bit in there.
But yeah, we've known each other. He was good friends with a neighbor of ours, and he came by. And he was cool. We went skiing together, done all that.
Cool guy.
Yeah,
Got
he also
Andre
he be in the markets too. What's up?
I got Andre into a pretty cool ski spot that
Did.
one year.
That's a secret though. Can't blow our cover. Can't blow.
I'm going to show you something that I just saw. Anne-Marie Band, a good friend of ours,
Thank you, Linda. I appreciate that.
post on Twitter or X. Pretty funny.
What do you got?
This is the market. There's the bull.
Not yet.
On
Not yet,
guard.
Bear. Not yet.
Not yet. No, not yet. Not yet.
Is the bear going to like pull it off like the Apollo or something? Or
Just you get that cane around his head and pull him out.
That's great.
we should do that for the trades too. If you have 3 losers in a row, you should get out with
You
a
get
hook.
the hook. Well, I'm 0 for 2 today so far. So
No.
All right, I'm working a short at 79s.
All right.
In the NQ, Hogue.
There we go. I'm short 79s.
NQ.
He's playing the range there, Danny.
Wait, what?
Yeah,
what
I'm looking
product
for
you short?
rotation here. 80 keeps rejecting. The market really struggles to stay above 80. So short 3 up to
You're trading
79.
crude, right?
Trading crude.
Okay, crude.
There you go.
Yeah, sorry, guys.
This is
80
this-
keeps rejecting. Short 79s. And we're going to look for small move to the downside. Nothing crazy. I'm going to look for it to pull back. I'm not taking a ton of risk. I'm looking for, honestly, maybe a 20-cent pullback to 23 to 30, 20 to 30% pullback, a rotation down. I'm not looking for a huge move here. If we can get this thing down towards 50, 55, I'll be pretty content with that move.
Your tilt is 55% long, 44% short right now in crude oil.
All right.
We got the tilt up there.
Yeah, we do. Tilt's 50-50 now, the NASDAQ and S&Ps. So
Is
it's been a 50-50 kind of day, man.
Andre, again, what's the tilt?
I'm not going to explain it. It's the aggregate position of all the sim traders trading here at Topstep. And
Combine and XFA.
correct. As far as that's how I understand it. So it's just a sentiment indicator in real time.
Yes.
This is the first day where I believe we're offering it. Did we give them a sneak peek a few weeks, back in September? Is that
Yeah,
true?
there were a couple of sneak peeks.
It wasn't this version of it though. This was much smoother and cleaner. But there you go. Good job there, production. Real-time snapshot of the sentiment bias of all Topstep sim traders.
And so you have to figure that if the number of traders in the trading combine and the XFA accounts, this is probably a pretty good snapshot of all retail traders, their positions and potential entry levels.
Hey guys, the tilt is scrolling across. It's that top scroll, horizontal scroll. See it, average entry, $86.70. Yeah, that's the tilt.
That's the tilt.
I don't know how long this is going to be around for. It'll
Dan,
pop
did
up.
you get filled?
Yeah, I'm short 79s.
Oh, okay, good. Nice.
Fill,
Yeah,
man.
we're in it a little bit.
Nice fill.
We got a whole 9 cents so far.
At least crude's moving.
Little movement. Those are the things you got to keep in mind too, right? Like some days you're not going to see huge ranges. Some days it's going to be a little slower. Excuse me.
Sure.
Got tickle. But we'll see if we can get a little movement to the downside here. It's trying.
Yeah, it is.
I'll tickle the
There we
bids
go.
down. Tickle the bid there.
I'll try and swipe it down.
ES trying to go lower, Roy Jenkins. I see that NASDAQ as well. I'm guessing NASDAQ's going to try to test that 15,000 level.
Yeah,
Big
it's looking good.
fat round number. I'm sure their stops just beneath, excuse me, I'm sure their stops somewhere beneath there. So keep an eye out for that. Could be a good entry. Hey, John, we see stops go off. I know we talk about it every now. Is that a trade you can make off of it? If you're flat, you want to get in and just fill the
Okay.
gap.
this is a really good question, Andre, because if you're thinking about getting into a position that's obvious,
Right.
you're probably going to be joined by a whole bunch of other traders that are thinking the same thing. They're looking at that same level as, as a layup. That's what makes me nervous about trading layups, right? Anything that looks too easy usually is. So if that's the case, I'll look at where I'm thinking about getting in and where my stop has to be. I'll try and get into that trade where I think my stop needs to be, because obvious trades, you're going to get a whole bunch of people in it. The algos know the basic risk parameters. They know where the stops are.
Right.
And they're going to try and push that market into the stops where they have placed opportunities to get in at a better trade location. Once you hit those stops, then you're in.
Right.
Now, what is it that short time frame traders to look for to put their stops? I'm going to put this on a 5-minute chart here.
Cool.
Okay.
Danny, keep us posted with your. We're watching crude. Okay, cool.
Yeah, we got it.
Yeah.
Okay, cool.
Yeah, this is on. Yeah, this is on
We
crude.
rejected 80s again.
All right.
Yeah.
All right, John, keep cooking.
Quick rejection. I like it. I like rejection.
Yes. Yeah. So, let's say, I know this is overnight. We're just going to use this as an example. If some shorter time frame traders are long here, okay,
Yep.
the market's going to kind of goes in their direction. It knows that a lot of traders are going to put their stop right below the previous bar. So the market comes up here, and on this bar, if you're looking to look for a long to try and get into this move against this low, you're going to have a whole bunch of stops just below the bottom of that bar. The market did, within 5 minutes, come and take out those stops. The buyers probably, would have had algos, HFTs. They probably had bids here. They protected that level, and the market continues to move to the upside. So maybe I'm long down here, and I've got a profit in it. Maybe I'm going to use the low of the last bar to limit my risk, which puts my stop here. Let's just call it 85, 88. Okay, maybe I'm giving a little bit more room because the market does eventually take out that low, takes out those stops, and then continues the move to the upside. So, here's a good one where, if we're long here, we never really get the opportunity to see a pullback that takes out the stop below the previous bar. It's such a popular thing to do when we're trailing stops, is to put your stop below the low of the previous bar. It's just comfort, right? Well, if it takes out below this bar, maybe I'm wrong. Right?
Yeah, no, you're exactly right. Well, I'm wondering if that's what we're going to see the setup here with what we're watching with the NASDAQ right now. So this is a good preview as to how this might unfold.
Okay.
I'm out.
Now,
You're out?
okay.
Yeah, we just got a big pop. It pushed too high for me to accept it. So,
Okay. Dan, this is a kind of a cheap trade up here.
I know.
Right? So we've got, here's on the 30-minute chart.
That's what
we got this high, we have this high. You're probably going to see some there. We just hit a whole bunch of stops above that high.
Yep.
That's where you want to get in.
That's the short.
Now I'm getting too close to settlement price for me. I'm going to see.
Oh, there's another one.
I'm thinking about this.
I'm not suggesting
that gap to settle.
You guys see, we just talked about.
I'm not suggesting that people try this, but that was a stop run above the previous day high.
Right.
Yes, it was.
Right.
So
yeah, I'm with Dan. I mean, I think this market is probably going to head back up towards settlement. Maybe get a nice take off high.
It brought in good volume here towards the tail end of this candlestick. It tells me now, 80s, except and above that 80 mark right now for me. When you see 20 cents, it moves 20 cents past the level on a day that's not a huge movement day. It's got me thinking, all right, that's a strong move there. It may want to close that gap to settlement price, or it may take a while to get there. But it closed the gap last night that needed to be filled from the prior day. Now we got an opportunity to see this thing move right back up to settlement price. So sit on your hands, be patient, and don't overextend yourself.
No,
all right, guys, I got to run.
That was quick. Right on.
Put anything else on, and
yeah, check back in if anything starts popping there, Danny. Good hanging out with you, man.
All right, we'll see you guys
later, dude.
Dan, I gotta slack you later. I got a couple of things I'll tell you.
All right.
Good luck with the move if I don't talk to you. Take care.
Thanks, guys. We'll talk to you.
All right. Yeah, all right, Johnny. So keep an eye on these NASDAQ. Try testing the 15,000s. Caught a little pop. No follow through. Sure, we're going to test it again, but there could be some stops beneath it. And I don't trade NASDAQ, but if I do see the stops go off, I will try to catch a long, quick scalp to the upside if it does indeed play out.
Right.
Well, this is kind of what we're watching. We're stalking this market. It's 10 a.m. Any update with what's going on in London?
I do not. Let me double check here.
Make sure it's nothing like big. Hopefully, it's just technology issues and nothing else.
No,
Okay.
Orders in all other instruments currently halted will now be expired, whatever that means.
I've never heard that before.
No, me either.
Well, if you haven't heard it before, then no one's heard it before.
Maybe it's a British thing.
Yeah, maybe it is. Where's Deanna? Deanna, come here. We need you.
We need her, right?
What's Dan's name, please? Dan's name is Dan. Latanya. Dan's name is Dan. I don't. What else? What else is there?
So I saw a question: Is there a weak high in the NASDAQ?
A weak high.
It's not real strong.
Like the actual week.
That's up here, but the market did come back up here. It's not a true weak or poor high, but the exactness of these bars up here is usually indicative of a lack of an unfinished auction.
Yes.
Now, some would call this a triple bottom or a triple top, and it did provide when we were up there. But if it gets visited again, be cautious. Why?
Yeah.
It's a cheap trade.
Yep.
Likely to be some stops on the other side if it does extend the range to the upside. But one thing about markets that extend the range on both sides of the initial balance. This is the S&P profile.
Cool.
If this market does whirl around and come and take out the upper extreme of the initial balance,
okay,
it's looked below. If it looks above, there's a pretty good probability that the market will extend and then return to range-bound trade. When it looks out both sides of the initial balance, there's a tendency for the market to fail below, fail above, and then return to balance. Now, anything, Powell could change that in a word.
Absolutely.
But it's a probability, a tendency, whatever you want to call it. But whenever I see the opening or the initial balance extended on both sides, I start looking for opportunities at the extremes to have price come back inside of value.
Boy, inside of value, seriously.
Right?
Yeah.
So, we had some decent volume here. We have a low volume node here. We have single TPOs. This should be resistance, right? In the S&Ps.
Yep.
This low volume area, the single TPOs. But if we start taking out a lot of these single TPOs, something may have changed, and we may see the market extend above the initial balance and then return to balance. Basically. So basically, right now, this low volume node is resistance.
What's the price? What do you got for price on that?
Prices, we're looking at 34 half up to 36 even, kind of that low volume node.
Sure is, man. So today we were just getting our patience tested. It's all right, man. I think we're doing a good job being patient. I know we tried to pull the trigger on some cheap trades early this morning, but hopefully we're all in this together and we're sitting on our hands. These are the days you start itching at yourself. You're like, man, I want to pull the trigger, but there just ain't nothing here. And
you keep saying we're all in this together, and I keep hearing that song from
how's that song go?
High School Musical.
Oh, that's right. You were doing that. Sorry, I did that to you the other day too.
Me having kids is the only reason I know that song, because they were that age, like when that movie came out and it was all the rage.
Oh, I remember that. That's right. That was all the rage.
It's like, we're all in this together.
I got him to sing, folks.
Yeah, you did. Yeah, you got him to sing.
I got him to sing. So
whenever you say that, well, we're all in this together. I'm like,
we're team trading this.
head.
We're team trading this thing.
Yeah. You're a musical person.
You're a musical person. I've heard you jam before. Pretty cool. So yeah, in the chat, hey,
Let's hit
everyone.
the like button.
I was just gonna say, let's get those likes up over 1,000. Come on, we got to do 1,000. We do 1,000 every day now, and also please subscribe. I don't know what the subscriber count is. It doesn't I can't refresh it right now, but let's keep that growing steady.
Michael's
Make sure
gonna think you don't like us.
Yeah, I know. He wants to come back tomorrow.
Michael's gonna think you don't like us.
Yeah.
What's that?
No, I'm saying let's get those likes up. Get those subscriptions up. You know, I think the next subscriber count goal is 50,000. So we got some work to do before we get there. And I'm sure the audience will like what happens when we reach that 50,000 mark. Are we going for 50, Jack, or are we under that?
Are we going for 50? Yeah.
Well, yeah, we're going for 50, but is there anything along the way?
50.
All right, let's
We
get
gotta
50.
be real.
You gotta be real, man.
We have to reconsider our strategy going forward after getting bamboozled.
Great
yesterday.
word. Great word. All right. Keep an eye on the NASDAQ and try the 15,000s.
It's another great song, "Bamboozled by Love," Frank Zappa.
Oh, my dad loves Zappa.
For some reason, I'm stuck equating everything to music right now. It's somebody in the. I gotta just tell you this. Somebody in the chat. Somebody. Hang on, let me see if I can find him. Abhijit, why do you have Logan from Succession? Oh wait, that's just Hogue. That is so funny. My wife, when we were watching Succession, kept calling me Logan.
I see it. I hear it. Oh,
You idiot.
NASDAQ choppy. Chop, chop, chop.
Oh my goodness.
Yeah, Logan, I like that.
I gotta wait till I tell my wife that. She's gonna laugh.
Yeah. But yes, keep those subscribers going. I can't see. Oh, we got to 1,000 likes. Good job, team.
All right.
Appreciate that. Appreciate that. It's too kind. I don't know how much of a difference it makes, but it does make us feel good and keep giving you guys our best content we can for these markets, man.
I wouldn't mind having Logan's pocketbook.
Seriously. My ex-wife called me different names.
Now we can do a quick news roundup while we're waiting.
Cool.
As was mentioned, Netflix raises prices, ad subscribers despite strikes, which is great because it means everybody's paying more for less content. And I don't know about you guys, but that's the one I almost want to get rid of. I feel like I can never find anything on Netflix. It's been forever since I've watched something on Netflix.
Agrees. Yeah, they're raising prices. I know that the password sharing thing was effective, correct? That's how the subscribers became added, I want to say.
Right.
The crackdown. I'll be honest with you, I haven't seen it. I'm between you, me, and the painting on the wall here. I'm using someone else's password for my Netflix, and they haven't got me yet. So if they're listening, they might get me now, but it hasn't gotten everybody.
Well, I'm sure Reed Hastings is in the chat right now.
Reed, I'm sorry, man, but yeah. Yeah, I mean, that's what we're going to do, charge higher prices. But yes, I haven't watched much on Netflix. Some of the sports stuff, the Formula One stuff I got really into, Drive to Survive. That was a pretty cool little documentary. But yeah, it's few and far between for me.
But the good news is that the full potential of AI has been unlocked in that it's reading ancient scrolls for the first time now.
Come on.
Really?
Yeah.
How? What? Well, hold on. AI reads.
Yeah,
What the hell? Is this real?
Yes, they laser scanned it and then used AI to read it.
That's incredible.
Do your own research beyond that, but they have whole libraries out there full of ancient texts that have essentially never been read or haven't in years and years. I think in this case it was something from Pompeii that had a bad day in 79 AD, but
Hey,
did it say what the scroll? Did it say what the contents of the scroll was? Because
I don't think so yet in the article I'm reading. I mean, I don't know, maybe.
Was it a journal? Was it a journal? Someone's journal? I would love to see what they were talking about back then. They're probably hungry, I'm guessing, looking for food the entire time. That's wild. I like this segment. Keep it coming. What, you got any more headlines?
Let's see what else we got here.
I like this.
Questions. Oh, we got her on this day. I'm just feeding whatever we get here.
Okay.
Anne Marie's watching. Hi, Anne Marie.
Yeah.
Oh, the on this day I got. We've already covered this. On this day, the Dow Jones plummeted nearly 23%.
That's insane, man.
The largest one-day percentage drop in the stocks market's history. Yeah, important thing from probability. This is where something like this really shows the thickness of the tails and the distribution. Something like the market, if we were following a normal distribution, would be impossible.
No, right.
Right?
Yeah. There was no distribution.
No.
Only chaos.
No distribution, only chaos. I like that.
Did they ever? Essentially, I wasn't around back then, but it was essentially just panic selling, right? Just fear leading into fear, right? What was the actual catalyst behind it? Did we ever get to that? Remember, like the flash crash that happened like 10 years ago? We still don't really know what that was.
Just a lack of liquidity. I don't know that anybody knows why it started. It just got overbought in so many different time frames that everybody just pulled out.
Yeah.
We kind of know what happened. So I was trading. Actually, I was still a clerk then, so I was actually sleeping during the day.
The flash crash.
And I got a phone call.
Yep. Around 2:45 p.m. in the afternoon, Chicago time. And
just said, Jack, you don't have to come in tonight. We're not going to be trading.
Yeah.
But with the flash crash, I mean, that's the reason they call it the flash crash. I can't say that word. Flash crash.
Flash crash.
Is that once that thing started moving, all of the algos and market makers dropped out, and suddenly there was no liquidity.
No liquidity, right.
So stops, trigger stops, trigger stops.
Right.
And when things get crazy enough, you got some real cojones to jump in front of that.
Right. We were told for
yes.
the traders that were long and that, here we go, they're testing this. The traders that were long and instantly just saw their unrealized P&L go to, deep red. All the veteran traders and the principals of the firm came to us and said, do not get out of your position. Do not get out of your position. Essentially, seeing the gap, sure enough, the gap did get filled, but I couldn't believe, you saw people sweat. It was scary for those guys that got caught long in that. But sure enough, it did come back. And they were commanded to not get out. But that was a hell of a risk, man. They could have taken down here we go.
So someone mentioned in the chat that they arrested some guy in London in connection with the flash crash. And
okay,
he did something wrong. I can't recall the exact thing he did, but I also don't think that some guy in London is responsible for that.
No, this is definitely not one person.
It's sort of a butterfly effect type thing.
I would think so, yes. Like you said, stops lead to stops lead to stops. And look out below. What do you got, Johnny? What are you looking at? So you pull up the S&Ps there.
Somebody was asking me to put up the profile. I'm thinking it was the S&Ps. If it wasn't, let me know. I do want to mention I am what I am in the chat. Succeeded in the trading combine today.
Awesome.
Combine we bought for him.
Awesome.
Nice job.
Keep telling us your success stories. We love to hear that.
Job.
All right, NASDAQ going to try to test this 15,000. It's not going to be easy. Nothing's easy today. Headlines out of the Middle East have been somewhat quiet so far, so they're looking for stuff.
Well, I think we're dead in the water until Powell starts speaking. I'm sorry, Chairman Powell. Oh,
he's a deadhead. Did you know that?
Yeah,
that's wild, man.
Yeah,
would not have would not have had that on my bingo card.
Yeah, I saw Dead and Company in Chicago. I don't remember where he was, but apparently he was there. He's a deadhead.
Yeah,
I wonder if he did mushrooms.
That's kind of that's what you have to do when you go watch him, right?
He's just seeing forward rates in a new way.
He hallucinates about rate hikes and stuff.
Could you imagine what the markets would do if Powell came out and was just like, things are looking yellow?
Oh my God.
And then that was it. That was just the statement.
Yeah.
Wow, you guys are all purple.
Yeah.
Cool.
All right, keep an eye on these NASDAQ. I'm going to try to do stop play. If the stops go off, I'm going to try to get long into it and get out. Do a quick scalp if it plays out.
We run the stops.
Yeah.
S&Ps just ran them.
They did.
Yeah.
Yeah, it's trying. Here come the buyers. They're going to try to defend this 15,000 level. They've already tried it once.
What is it? Oh, that's the NASDAQ. Oh. No, the S&Ps did not extend the range. The NASDAQ did. There's the stops.
Yep. Oh, shit, I missed it. Son of a wrong chart, wrong ladder. Damn it.
Were you trying to buy the NASDAQ?
I was going to, yeah.
Brave man.
No, I missed it, though. The stops did go off. Damn it.
Yep. Yeah, and the S&Ps are holding here.
Yeah, they are. Volume.
I'm in for my next loser.
What are you doing?
I bought it.
Yeah.
$27.50. I don't know how much space I have left, but
tilt is not showing well. Short bias of 63% in excuse me, the NASDAQ 50-50 on ES. I do like it.
We just put in kind of a weak low here.
Yeah, weak low, and I mean, we're playing the range, correct? Too, right? I mean, I actually do like that one.
We did not put in a new low, so
Rejection, correct?
no. I mean, it's not textbook excess. Auctions die in excess, and we don't have a buying tail down there. But we did run a bunch of stops down to that low, and right now it's in profit. So we'll see what happens. The NASDAQ did take out the low, ran a bunch of stops.
Yeah,
it's not doing real well down there.
No, it's not. I like the range trade, especially today. Got it. Huh?
Yeah, it's a NASDAQ takes out and puts in a new low here, and I'm looking at four tick TPOs on the NASDAQ. Yeah, it just put in a new low, so
NASDAQ.
I'm gonna get out of this one, and we'll look for something later on.
Agree.
We've got about 40 minutes for Powell, so we'll see what happens.
40 minutes till Powell. Yeah. Unless something, I like the okay. Tilt's not saying anything. Hey, let us know your trades in the chat if you guys are seeing anything, any setups that we might not be seeing, or any new subs.
NASDAQ's continuing this push to the downside.
Yes, it is. Yes, it is. So that stop play probably wouldn't even have worked.
No,
I don't think.
No, I mean, this is the NASDAQ. I mean, last week's low, this low here. This is the overnight low.
What's that price, Johnny? Sorry.
The overnight low was 14,937.
937. All right.
Last week's low 19,949.75. 37.40s. Right. So, if we get the opportunity in the S&Ps to look at the overnight low, sometimes that can kind of put in the S&Ps from the overnight is 43.2075. There's a question yesterday about in group coaching. If I look at the profiles from the overnight, and the only thing I really look at from the overnight information is the low, the overnight high, and possibly a point of control from the overnight session. So, overnight session point of control is probably somewhere here. It's not part of the equation yet today. But if we do get a look at the overnight low, maybe we break below it, maybe we come back inside of it. That can sometimes give you a pretty decent opportunity to limit risk. And what are we doing here? We're limiting risk first, right? If we lose less, we can make more.
Yep.
I've been over limiting risk since we've been trying to do this on screen.
It's
making me crazy. But
what's the 30-minute? Okay, I'm listening.
So, stop longing. I'm a contrary trader, though. I mean, that's why I love range bound days because I'm a contrary trader. I'm fading the extremes all the time. And
That's kind of what I'm seeing right here.
Not that good on trending days, but I'm getting better at it. To use the volume profile and those volume shoulders to try and get in.
And we're at the lower end of the range right now in the S&Ps. Oh, I like, it has been quiet. I like the range bound. I'm itching to get long.
Bottom, week low.
I'm itching to get long. Take a quick one. We'll see.
You are. Here, I'll do it.
All right, fuck it. I'm in with you.
We're long.
Where from?
I'm working 32 halves filled.
It's 32.
Ran right through it too. 25 halves. My bad.
Yeah, I'm 26 quarter.
I just plowed right through it.
We're just like getting smacked in the face every time.
Oh, good. The seller's gonna come do this.
I wonder how close I am to the $1,000 daily loss limit.
Our risk manager is about to be on here in about 10 minutes.
Yeah, he is. Yes. So, I mean, we probably should have waited for the overnight low, shouldn't we?
Wasn't it? It was at the overnight low, no?
No. The overnight low in the S&Ps is 20 and 3/4.
Okay. I think those are stops. I think it's up, and away from here, John. Yes.
From your mouth to the trading god's ears.
Yes, if they're listening. Yes, long from 25 half guy. There, thank you. Good job. I was working a bit. It went right through that thing too. Almost like there's stops.
Are you still on?
I am. Six handle stop here. 25, 19, yeah. Where's the 300?
So we were talking earlier, and basically what we're doing here is we're putting on a clinic on how not to trade.
I mean, I don't know. We're playing the low end of the range right now. It's in a range bound day. Light volume. Here they go. I don't think it's.
Why would I fight the trend? Well,
is it really a trend?
Not really. I mean, I'm still stuck in the idea that the best trades are usually available opposite the most recent activity. I'm always trying to be the innovator.
First to the party. Oh, you showed us that bell curve chart yesterday about that.
Right.
Yep.
So we'll take our chances.
Yeah, I mean, I don't think it's the craziest.
There's reason for everything we're doing.
I don't think it's the crazy. I don't see it as that crazy of a play. It's range. It's inside day, and
so
we're at the low end, and it's quiet. And the volume to the downside wasn't a lot, so maybe it's just some sell orders getting off. Then we'll return to range.
We don't have any divergence as far as delta is concerned. Delta is congruent with direction, so it's shorter time frame sellers. I think doing this, if they end up too short, we can catch the move the opposite direction.
That's what I see.
Who knows?
Fear turns greed. Fear turns to greed at break even, says SSS.
He's probably right.
Yeah. It's choppy.
Yeah, I mean, we're here a half an hour before Powell speaks, and
how far are they really going to put? How far are they really going to push this thing?
Around, it's for entertainment factor.
Tradertainment. Yes.
Tradertainment. Right. So,
how do you get that hat? Al Chemist wants to know. You got to be a funded trader. 5,000 club. That's how you get the hat.
You also get one of these.
What do you got?
Certified funded trader.
Is there? Yeah. We got some goodies for you. We take care of our people. You guys take care of us. We take care of you.
Yeah.
So what time? We got 10:24. Okay. You still in there, John?
Yeah.
Oh.
Yeah.
So we'll see how this thing turns.
Yeah, we're still in.
I'm finding I don't have a hat. There's something we can do about that. Talk to the people that need to be spoken to. All right, so it looks like we might get I don't know how much follow through there will be to the upside here, but something.
So the question A, looking for supply and demand levels.
Yeah.
I mean, in a manner of speaking, maybe a little bit differently than a lot of people focus on supply and demand, but my focus is always on the extremes of the initial balance or the extremes of a profile, unless I've identified a trend, in which case you could say that the high volume to low volume nodes are supply and demand zones, supply or demand in the low volume areas.
Mm-hmm.
So it's just a different way to look at it, I think.
I like that. You got the third. That's a 30-minute. Yep, 30-minute. Nice. I mean,
Yeah. Yep.
So that bar, 2 bars over, John. How much? Yeah.
This here?
Yes, that there. Yes. We're looking to. What's this?
What are you looking for?
Oh, sorry. I'm saying how big was that move in that bar?
The range, 49 to 26, so 23 points.
Gotcha. All right.
Approximately. There's nothing finite in trading.
Shit, I want to get out there.
That's where you want to get out?
Getting there, yeah. Just get back into the chop or that back to that range that we've been stuck in.
Well, here's
hit me.
Here's what we're looking at. This is volume profile, right?
Yes, sir.
We talked about the idea that this low volume area could act as resistance.
Yes. Okay.
34 half. Remember we were talking about that?
Yep. 100%, man. We're trying to go there right now.
So we want to take out the high of this bar and end up on the other side of this low volume node to really expect any kind of continued participation to the upside.
34 half. We're targeting 34 halves, everyone. John just explained why. Freaking playbook right there, man.
Well, sometimes even a blind squirrel finds an acorn. Well, we'll see.
Yes, we will. What do we got on tilts? Everyone, keep an eye on tilt. Scroll across the top of the screen. Okay, yes, average entry short. Short.
29.58.
Yes. And I'm looking.
Andy.
I'm out. I got out, John.
Did you?
Yeah, I did.
Well, I mean,
I covered.
If you're looking for a short, you got out at the right place because high volume to low volume, I call these volume shoulders.
Yeah.
Those can be decent opportunities to limit risk.
Yes, they are. So I guess everyone's questioning, why are you catching a falling knife? I don't think it necessarily was a falling knife. It was more of a range trade like John and I were talking about. We got Powell in 30 minutes. How much further do they want to take it to the downside, considering it was light volume to the downside? Excuse me. So that's kind of the thought process was there.
So I'm going to follow suit here and get out right there.
Nice.
On that volume shoulder.
Look at that.
So we had a win, but I have a feeling that.
No, don't say it, man. Don't say it.
I have a feeling that the low is in, and we're going to rotate at least until
we got
pow.
Pow.
Yes. But we almost have a double distribution trend day here. We've got high volume here, low volume here, high volume there, time here, no time, no volume here.
Look, it's 34 halves. They're hunting for 34 halves, like you said. It's all right though. Can't complain about winners.
That would be like best case scenario for a short, best price.
Yep.
Because if it gets through that very far, it might be telling us that the trade is wrong.
So that was a nice little trade we snuck in there before the man starts speaking.
Yeah. Chairman Powell.
Hope he says some cool stuff too. We will not be on, correct, Jack?
At what time?
At 11.
No, we'll be doing Tendler session, but we'll give.
Gotcha. That's okay. Well, obviously we'll be trading it, and after the Tendler session, if anything pops off, if these Fed speakers get the markets cooking and stuff, I'll definitely get back on. Look at this rally, unbelievable, son of a mother.
No swearing.
Yeah. Sorry,
Only I get to do that.
I censored again. Good job yesterday. We'll definitely get back on if the markets start popping. If that's cool, Jack.
See, this is a good question.
What do you got?
Mahmood is asking, how do you feel when you get out of a trade early?
Yeah, good question.
I try not to get out of trades early, but define early. Is it an established risk to profit target, or is it a trend? If I get out of a trend too early, I'm just going to have to deal with it. If it's a trade that I planned and played out my way, I made 40 ticks in the S&Ps and it goes another 60 my way. Oh, well, the trade wasn't planned for that. So do you consider a trade that goes out as planned but continues past getting out of a trade early? No, I don't. But if I'm in a trend and I establish, once in a great while, there'll be an opportunity on an opening range trade where I'll say, this market is set to continue this move all day long. I'm going to do my best to get out on the close. Sometimes I'll get it. Sometimes I won't. But, you see some pretty big numbers come up there. It's a little easier to accept the fact that we're not probably going to sell the high tech or buy the low tech. So it's a really good question, and I don't get mad at myself anymore because getting mad doesn't do any good.
There you are. Sorry. What were you saying, Johnny? I actually hit mute. Did I miss any good stuff there? I apologize.
No, it's all right. We're just talking about somebody asked what I do if I get out of a trade early. So
right. Oh, yeah.
About that, but I can't get mad. I don't want to get mad at myself, and getting mad at the market or another person doesn't do anything, and it doesn't do any good. My dad told me a long time ago, it doesn't pay to be mad at a group of people or even one person, because half the people you're mad at don't know you're mad at them, and the other half don't give a shit.
It's true. Seriously.
Son, forgiveness is for you. It's not for them. You can forgive. You can move past it, but if you can't forgive, you're going to carry it around, and it's going to eat you up.
It's true. It is. So forgiveness is for you, not for them. I like that.
Well, on that piece of wisdom, what do you guys think about us bringing in Mick?
Uh-oh. Yes.
We're not in trouble, are we?
The boss.
Not yet, but we'll see.
Come on
He's
in,
the
Mick.
one that decides. So
Yes.
we'll be back in a few seconds with risk manager Mick, shoulder tapping, shouting, outing. Hello, Mick.
Hey, good morning, guys.
What's up, Mick? That stash is looking amazing today,
It
dude.
is amazing. It is just amazing.
What'd you do to that?
Besides when I clean up the rest of the face.
What did you do to that thing today? It's beautiful, man. It's beautiful.
Hey, I just came here ready to be doing some shoulder tapping and shouting out in.
Sweet.
How's everybody doing? It feels like a Friday, but it's Thursday.
Yeah.
It is for me. I'm leaving. I'm leaving early tomorrow morning. I'll be back Tuesday.
Where are you going, Jack?
Going to Napa Valley.
Oh, I was just there. It's incredible.
I hope it is.
It's incredible.
Very nice.
That sounds nice. Thanks for having me on, guys. I was listening to your segments ahead of time, and if I could, before we get going on the shoulder tap stuff, there was a question from Amood, I think it was. How do you feel if you get out of a trade early? I have a strong opinion on this one, and I think Hogue answered it very much in line with my own thoughts. But as far as getting out of a trade early, really shouldn't happen. Now, Hogue, you did kind of separate the difference between getting out at a certain time and then watching that trade go into your favor. But as a trader, you've got to have a reason to exit your trade, whether it hits the level you thought it was going to, or it's either going against you and you need to get out at your puke point. But I think with this question and where I want to come from with my own opinion on that is, if I get out of a trade, I have a good reason to get out of that trade. And if it continues in my favor, I'm not going to worry about it too much.
Right.
Number one, I was right. I got paid for being right. And I had a good reason for why I got out. And I need to be happy with that. Sure, if I just held on to the trade and, it went in my favor, yes, I would have made more money. But I have to, be at peace with, I got out for a reason and it was a good trade. I did the right thing. If it continues going, okay, great. Coulda, woulda, shoulda. But I wasn't there to make X amount more or catch that much more of the trend. I got out where I needed to. I'm at peace with that. Move on to the next trade. Find another one.
Mick, do you feel like sometimes, if you planned a trade, your trade planned out, and then it continues to go, that offers kind of a new opportunity. It's not the same trade. It's a new opportunity to maybe catch some more of a continuation move past where your original trade was.
Yeah, potentially. And I know a lot of traders will do that. For myself personally, though, and I can speak only personally, it's a time for me to reset. I framed out the trade. I put the trade on. It played out in my favor how I thought it would. Great. I won. And, not only do I have dollars in my account for that, but I've got, points on the scoreboard for my winning trades. So that's kind of what I think. Also, though, you guys have heard me say this, John, you especially. Anytime you put a trade on for your entry, you need to know two things: where you're getting out if you're wrong, and the area of where you should be getting out if you're right. Now, if you go all in, all out, and you get proven right, it goes to your level, you're all out. You get out, you take the profits. But if you're someone that scales, we were talking with a guy, Kyle, who had that big $62,000 winning day. Mm-hmm. We were talking to him closer into the close, and Brett's like, he's got 15 on. Brett's like, hey, you already caught a piece of the trend for the day. He's like, why don't you peel some of that off, pocket the money, pocket your profits, take risk off the table. He still had a bias to the downside, and Kyle peeled off 5 of his 15 contracts. If it were me, I would have peeled off 10 of the 15 contracts. Right. I'm already up 62 grand, which is probably more than he thought he was going to be making on that trade. But, that's an area where, back to what Amud had asked, and, you can exit the trade and keep a runner on. We always talk about keeping a runner on. Mm-hmm. There's nothing wrong with keeping a runner on if you haven't been proven wrong. If the market's still working in your favor and you're proven right, take risk off, pocket some money, and let that runner go. So there's a couple ways to do that. It depends on your strategy if you're all in, all out. But if you got it framed out ahead of time, you're going to be at peace with that that exit, even if it continues going in your favor. And it's really just a maturity thing, Right. I couldn't say that to you 15 years ago, what I just said. I'd be squirming in my seat. Oh, I could have had, I see dollar signs. I could have had another $2,000 in it. Could have had another $5,000 in it.
I could have been a contender.
Right.
Another thing before I hop in, I know we were talking about, what's it called? Speakeasy lounges. Hogue, do you remember when we went to, I wasn't part of the conversation. I listened to it. You guys were talking about speakeasies. Do you remember when we went to that spot, The Office, downstairs?
Yes.
In the aviary? Very expensive cocktails.
Right, yeah.
So I was excited because yesterday I'd had this plan for a few weeks. I went over there again yesterday, but I went for a special event. There was an Amaro tasting there. Amaro's like an after-dinner drink, an aperitif. And Nonino is a brand of Amaro. And they actually had Francesca Nonino. She was in from Italy, traveling around the States.
You Italians, man. You Italians. Go on.
She was in there doing kind of the tasting and stuff like that. So I actually got to sit down at a table with Francesca for the night and had a great time at the office. We ate well, we drank well.
Nice.
Very nice. Very nice.
So just wanted to share that because I had a good time and I felt like a little kid that I was going to this thing in a place that Hogue had been to.
Oh, that's dope.
Is she a good trader?
She's good at what she does. She's very good at what she does. She's got a killer personality. I don't know if she knows the finance world. I think they're a long line of generational distillers of this these spirits out in Italy. So with that, let's get back on track. I'm feeling peppy this morning because I'm seeing some of our traders just crushing it in the markets. And I've got two featured traders that I want to talk about today. Before I get into any of the shout outs, though, Michael had asked the other week for me to put together some trader success metrics. And what those metrics are basically some of the statistics that you would see on your own trade report here at Topstep. But what I did was I put together a table, and it is a compilation of a large sample size of the traders that we've called up from the Express funded account and to the live account. So James, John, if we could pull up this table that I created, I want to talk to you about some of these metrics. Now, these are averages, so this isn't every single trader. It's a blend of about 30 of some of our more recent traders, many of which you've seen trading cards for. But if you are curious about some of the stats that our Topstep traders are putting up in their funded level account, the Express funded, and getting called up to the XFA, this is what we're seeing on average from those traders. So
awesome.
P&Ls averaging about $2,500 a day. Average trades about 17. Now, this is, again, a large sample size. So we've got quite a big group of traders that are very active, slanging 10s and 15s. They're in and out long and short throughout the day, picking their points to go long and short. And then a large sample size of these traders that make up these metrics were, believe it or not, 1 to 3 trades a day. And those are the ones that I really like. They're selective. They're stalking the market, they're pouncing on it when they see the opportunity. But on average, 17 trades a day. And then average winning trade, $714. Heck, I would call that a good winning day for myself.
Absolutely.
They're doing it repeatedly over and over again, which gets that average P&L to about $2,500. So average losing trade only being $610. This is where we talk about risk reward. No trader has any business risking more on a trade or a trading day than they do on their average winning day. So I'm happy to share that while this may look like 1-to-1, remember it's an average of about 30 traders. So our winning traders, our traders that are getting called up to live on average, are making more than they're risking on their trades. And obviously, there's some anomaly days for these traders that might skew their own statistics a little bit, but this is what we're seeing. And then you guys have heard me talk about winning hold times and what's a good long hold time, what's a short time frame trade, what are those holding times. I'm proud to share this. 28 minutes is the average hold time for these trades, with only 12 minutes being the losing hold time. So this should tell everybody out there who's an aspiring trader who wants to get one of those certificates behind John, one of those hats for the 5K club that Andre's got on his own. They're much more impatient with their losing trades than they are patient with their winning trades. Average hold time of 28 minutes. Now, someone that's doing this, you've heard me say it, the money is made catching a piece of the trend for the day. This is living proof of that. And I just want to emphasize that 100 times over for those of you that are out there watching. Moving on from the holding times, 77% winning days. Yeah, the traders were calling up to live accounts in the prop firm. 3/4 of the time, they're making money on the day. I don't care if it's $50 or $5,000. They're making money the majority of their trading days. For those of you that do have low percentage winning days, it should be a very good indication that your strategy is not working in the current market environment and there are tweaks that need to be made. Actually, Andre, I'm happy you're on for this one because this kind of reminds me of something that you said 5 or 6 years ago. Oh, it's not a bad thing. I think I remember you saying when you were with your prop firm that if you had 2 losing days in a row, like something's wrong.
Something is wrong. Right? Something's wrong. Taking the 3rd day off for sure. Mental break, but yes, definitely 2 days in a row. You're down. 3rd day, take a day off, take a mental health day, even though as much as you want to get back in there, but it was the best thing you could have done.
Yeah.
You come back with fresh eyes.
Absolutely.
Yeah. From a professional standpoint, it's like this is a performance-based business. If you find yourself being down money on 2 of the 5 trading days, and it's back to back, like you need to act like a professional and evaluate what's going on, because our funded traders that are earning live accounts, they're over they have 77% winning days, so they are putting up more winning days during the week than not. And then winning trades too, 68%. I'm proud of this group that makes up this statistic. They're right more than half the time, and you don't even have to be right half the time to be successful trading. But a 68% winning trade is really, really good. And Hogue, I know you've crunched all the numbers on keeping the math on your side. What's the lowest percentage of winning trades like you could still be profitable? And it all has to coincide with what your risk reward is. But
right.
I mean, right. I think you could tell me what's the lowest with a normal, reasonable risk reward. How often could you be wrong, or what percent of your trades could be losing trades and still be profitable if you have that off the top of your head?
Well, I mean, if your winners and losers are even and you're right half the time, you're gonna bleed the account out through commissions.
That's right.
So you need to be better than that. If you're right 4 out of 10 trades, but your profits are twice your risk, you can build an empire that way.
Absolutely.
If you're right 30% of the time, 3 out of 10 trades, you're going to need 4 to 1 probably reward over risk to build that empire. And the more you're wrong, the bigger your profit targets have to be to keep you on the profitable side. We call them keeping the math on your side.
Yep.
Right?
Do you still happen to have that table? I'm sure you do. You save everything. You've got hard copy archives.
If somewhere I've got it, we'll have to dig it up.
I miss seeing that big stack of paper you used to keep in the room, in the production room back at the old office.
Right.
Oh, here he goes.
It's right here.
It was never too far away.
No. Still there.
That is a man that takes it seriously as you need to.
Yep.
So cool. Thanks, guys, for pulling up the trader success metrics. I was excited to share these, and I think what we could do with these going forward is maybe when we talk about a featured trader on their trading card, we could maybe have their metrics and then how they size up to the average trader that is earning a live account. And I think we could expand on this. These are only people that are getting called up to live, and it's a sample size. Maybe we could do some trader success metrics that, hey, this is the bare minimum you can have as far as your own statistics to be profitable over a period of time. So
this is awesome.
Started with this.
This metric is awesome, Mick. I know a certain someone is watching right now and is a big fan of this metric that we're showing, and wants us to continue to post it, if you catch my drift. So
okay, all right.
Hello to that certain someone out there watching.
Who would that be?
Hello to Nebraska.
The eyes in the sky.
Yeah, the man behind the curtain.
That's right.
All right. Well,
awesome.
With that, thanks for the compliment, Andre. Let's get on to some trading cards. I've got shout outs. I've got 2 trading cards. Can we pull up the card for Trustin?
Yeah, keep in mind, Mick, we got 12 minutes till Paul speaks.
Okay, all right, yes. Thank you. It's easy to lose track of that when you get in the moment and start
for sure. We got
with your back to the boards and the screen. Yeah. So Trustin has been with us since January 2017. He's been around for a long time. He's doing really well in his XFA. What I have up here is only from 7 days of trading. And in those 7 days of trading, he was on a 5-day streak before hitting his daily loss limit on day 6, which is not a big deal because he's averaging very high P&Ls. A couple of those days were $5,000 winning days. So if you're making $5,000 and only risking $3,000, that's okay in my opinion. But a 5-day streak for $17,000. As soon as he hit that 5th winning day in his express funded account, per our payout policy, he took a nice chunk of it out, but he also left himself a nice cushion in there. So he took about a $7,000 payout on day 5. We love traders paying themselves.
Yes.
It helps, in my opinion, with the money management. You're making that money tangible. It's not just a number on the computer screen.
It's real.
And I like a little bit of a broad range here. He's trading the equity indices, mini Dow, NASDAQ. I used to trade the mini Dow a lot when I got started prior to getting involved in the S&Ps. Never really much of a NASDAQ person myself. It moves around too quickly.
Wow.
But I know our traders here like that. But gold and crude oil, Danny would be happy to see the crude oil trade. And, gold's a good market to trade as well. So if I have any words of wisdom for him, and I did just kind of say it's okay, but minimize his losses. This current account, he's putting up large winning days, so that $3,000 daily loss limit, not a big deal in the scheme of things. But you want to be careful of risking large amounts of money, because you put a few of those together, you get a little slippage on your auto liquidation at the $3,000 daily loss limit. You could be out $10,000 in a day. So I want to point out how quickly a nice healthy account balance could really, it could be a complete 180 after just a few losing days in a row when you're risking that much. So Trustin's been around for a while. One area for improvement or something to be conscious of, but keep it up. So I'm really happy for him, especially for someone who's been around for this long, working on their craft and developing their trading. So really happy for him. Next person I'd like to talk about is Rafat. Rafat is one of our traders who got called up from an express funded account
Ooh, Geneva,
to a live
Switzerland.
account just yesterday. Switzerland, yes.
Geneva, Switzerland. That sounds amazing.
Yeah.
Very much like to go there.
Absolutely. Go on. Sorry.
Skiing. Andre, you're a skier, aren't you?
Yeah, I am. I've been to Geneva. It's freaking gorgeous.
Oh, have you really?
Yeah. It's freaking perfect. Sorry, go on. You got a segment to go.
No, it's okay. It's okay.
Yeah.
Kind of straightforward here. Average daily P&L, 60% winning, 67% winning days. He's trading the equity indices. He does have short hold times, and as a matter of fact, his hold times are a little bit skewed just so far in this trading account, meaning that he's spending more time on average in his losing trades than he's spending in his winning trades. So that's something to be conscious of. You can still be profitable if you're riding that out, but odds are that can hurt you. And over time, it probably will. So something to be aware of, Rafat, especially as you go into this live account. But I wanted to mention that Rafat was also, these statistics are identical in 2 of the express funded accounts. We called them up from 2 XFAs yesterday. That money's going into 1 XFA. So he's going to be starting in a live account with $42,000 because he got transferred over to each one of those accounts, about $21,000. So that's a nice, healthy account balance. Hopefully he takes a payout, whether it's half of that money or he wants to keep a bigger cushion. For someone who needs to work on limiting their losses, maybe keeping a little bit more than half of that in the live account to allow yourself to weather a losing streak, cold streak, whatever you want to call it. Traders, the more you risk, the more you want to keep your account beefed up. You want to have funds for a rainy day because your capital is your #1 tool to navigate the marketplace. You don't have the capital, you can't post the margin, you can't make the trades, you can't trade the size. So always have that money stored for a rainy day.
That's right.
That's all I've got for him. Hogue, I don't know. I want to change something up here. So I want to talk about one of our live traders, Rosciato. We had him featured in a trading card here recently.
Yeah, we've been hearing about him a lot.
Yeah. I mean, I almost said a swear word. He is crushing it. He crushed it in the XFA. He's crushing it in his live account. He's up $5,200 today on one trade. He did a 6-lot trade. I kind of want, if you could pull up a chart of the NASDAQ, I think it'd be fun to show what he did, because he came in so far one and done. He got short 6 contracts about in the NASDAQ at 15,071.
Right here?
Yeah, kind of probably at the bottom of that top down candlestick. So yeah, right around that price. So he sold 6 there, covered it 9 minutes later with a profit of $5,200.
Beautiful.
Yeah, he covered 27. So he came in. I mean, as far as I'm concerned, I mean, we've kind of had a lack of a trend on the day, but he did sell it high. He covered it lower, and not bad for 9 minutes of good analysis.
Not bad at all.
And decision making. So I just wanted to throw that in there. And then that's it for my trading cards, but I got a lot of shout outs today. So
let's go. Hit us.
Travis Forrester, his live account up $14,000.
Damn.
Dwayne in his live account. Oops, and I said the last name. Sorry. Dwayne's up 10,200. Slinging size in that live account. We've got Rithvik Krisha in their live account. Slinging size up 11,000 on the day, bringing that XFA account balance to $31,000. So with an account balance that big in that account type, we are really looking at that trader as a potential call up.
Yeah.
Yeah, and a couple more. We got Scott K up 10,000. Again, swinging size. They're at a $25,000 account balance in their XFA. And then last but not least, William C up 7,800, trading the NASDAQ in his XFA.
Damn. That's awesome, man.
Yeah, big numbers today. So I love seeing that. I love the small, consistent profits too, but when it comes to shout outs, it's nice having some 5 figures to rattle off for people.
For tradertainment, right?
For tradertainment. Agree, Anne-Marie. I am mesmerized by that stash as well. Anne-Marie said it, not me.
Thank you, Anne-Marie. I appreciate the compliment. I'll take it as a compliment, at least, I guess.
Yes, awesome. Is that all you got for now, Mick? We got Powell here.
That's what I've got. Yeah,
awesome.
We're 4 minutes or less to Powell, so let's get our focus around that and see what the Fed's going to be doing.
Yes, Mick will be watching the risk. We'll be watching the markets. Jack, do we have anything else we want to say before we wrap up here, or we got the big power player session
first?
Yeah, we got power player Jared Tendler coming up here.
I would like to say goodbye to Mick. Thanks for stopping by.
Bye, Mick.
Enjoy your travels. Have some wine for me.
I will have that and more.
Thanks, Mick.
Thank you, guys. Take care.
So I think right now, before we're going to have Jared on at 11, first I would like to share our current top 5. And these are the profits and payouts associated with the account. In live, we have our man Hughes still on top. Sultan, Kyle, after that day 2 days ago, moving to third place. Daryl K and Wally G.
Damn, Wally G.
Yeah, it's not Ollie G.
Ollie G. Wow. Hey, man, we got to get these guys on and tell us their ways if they're down.
Right?
Maybe he's like the Wario to Ali G. Whatever the hell that would be.
Wow, 90 Gs, 80 Gs, 70 Gs. Good job. Nice trading out there. See, that's what we do at Topstep. That's pretty damn cool.
So, traders, what I think we'll do right now, you're probably itching at your buttons ready for Powell at 11.
Yes.
But keep this on in the background because we're going to take a quick coffee break and we're going to come back with Jared Tendler, who's going to be doing a session today. We took the questions from the forum and we've put them, he's going to get to those. Plus, we'll take questions from the chat. So, Hogue, you can stick around.
Yes.
And we'll be right back.
Thanks, Andre, for joining today. That was awesome.
Guys. Later, guys.
All right. It is time for power players, and we've got quite the power player with us this morning. Not only is Powell speaking, we have Jared Tendler here. Jared is an author, a scratch golfer, and a hell of a nice guy. If you've never seen Jared, I'm glad that you're here to see him today. He's got 2 books about gambling, the Mental Game of Gambling and a Mental Game of Gambling 2. But this is the one we're really focusing on today, the Mental Game of Trading. Jared, how are you doing today? Really happy to have you with us.
I'm doing great, John. How could I not be doing well after an introduction like that?
Okay, that's right. That's well. I believe that your book is a very important book for anybody that's trading. There's actionable items that help you work through the barriers that every trader has. If you're, whether you're new or old, we're still always working through those barriers, and it's a really, really great book. Now, I'm going to bow out. Jared has got a bunch of the questions that you guys submitted for him. We're going to collect some of the questions that are coming through in the chat as well. You guys have heard enough from me. You want to hear from Jared. So, Jared, take it away.
Thanks, John. Well, there may be a couple questions we may call you in on because, I'm not the purveyor of all things trading related, right? I mean, when we talk about the mental and emotional side of trading, you got to make sure that you have a good strategy and system in place, because if you don't, it becomes very difficult to kind of know where the mental game begins and where your trading strategy ends and begins also, right? There's a bit more chaos involved, and I think there might be some questions where people could certainly benefit from your perspective. So let's get to the questions. First one is, I've been profitable for 3 months and consistently, we assume. But this month I feel the old habits coming back. What can I do to not go back? So I kind of view this in the category of New Year's resolutions, right? And many of you may have tried this before. Say you're going to lose weight, say you're going to work out, whatever it may be. 3 or 4 months in, what happens, right? You start to revert back, if you even got that far, to your old habits. And why is that? Because motivation, inspiration can only carry you so far. You generate a lot of momentum, early on, but then, we invariably will fall back to the level of our training, right? We aspire to more, but if you aren't using that energy to correct the core weaknesses that led to, obviously some of the trading mistakes that you had before, or in the case of New Year's resolutions, why were you not working out? Why were you eating poorly? Those weaknesses need to be understood, not just corrected, right? If you have a complicated problem, especially with some of the mental game issues that, plague many of you, right? The FOMO, the greed, the anger, or as I like to call it, tilts, the revenge trading, overconfidence, which I'll talk about. There's some questions here related to that. So there's a variety of mental game issues that can plague you and can be the thing that you might be starting to see kind of pulling you back and kind of, hearing almost like the echoes of them in the back of your mind, like the tantalizing voices saying, trying to seduce you back into bad behavior. You have to not just know what those are, right? Many of you know what your problems are, but you need to spend some time actually dissecting that. And fairly shortly, I'm going to give you a tool that you can use to do that. But it's not really useful to to start working with this tool until you know specifically what those mistakes are. So I've said kind of a lot of theory here. Practically speaking, what I would make sure you do is write down all of the mistakes that you are kind of anticipate making in this spot now, right? Maybe they're not exactly all the mistakes that you've made before, but there's a handful that you can see more likely coming. Like the signs are there. So and I'm talking about maybe mostly like the trading mistakes, because once you start with the trading mistakes, then you can start to look at what emotions are likely to be present there. Is it greed? Is it anger? Is it fear or FOMO? Is it more related to confidence and overthinking? Is it related to overconfidence? What are the emotions that are likely to be present when you're going to be making those mistakes? And that begins, your ability to then use the tool I'm going to show you very shortly. But again, I think what you're trying to do right now is to game plan against those mistakes. We're not going to say that they're guaranteed to happen, but you are likely to be continually tested. And you want to make sure that you can pass that test, right? Be able to kind of upgrade your reactions in those moments. All right, next question. How do you manage distractions while waiting for a trade? I find myself getting bored and watching YouTube videos, but by doing it, I end up missing some trades or trades I would like to take. So Jack, if you can share my screen here, because there's a very helpful theory out there called the Yerkes-Dodson law. Okay, and what you can see here is the relationship between performance and stress, emotion. Psychologists call it arousal, right? Talking back in the early 1900s. But the bottom line is like emotion, energy, right? You need a certain amount of it to get to your peak, right? If you are lacking energy, which is what's happening for you here, right? You're kind of falling down the left side of that curve. You don't have enough energy. You don't have enough focus, motivation, interest, or emotion to drive your performance higher and keep you there. And so then conversely, right, maybe the trader who asked the previous question, right, is dealing with emotion that takes them down the other side of the curve, right, where now your emotions are running too hot, right? And then that actually shuts down higher brain function. You're not thinking as well. You're not planning as well. You're not making decisions as well. But the exact same thing happens when your energy is too low. So in both cases, energy is too low, energy is too high, emotions are too low, emotions are too high, you suck. Okay. What we're trying to do is drive our way higher. And so, if you're on the right side of the curve, you're trying to reduce that emotion to get yourself back. And for you are trying to generate more energy. So how are you going to do that? Well, now that you know that that's the problem, right? I would say, trying to solve for the distractions, I would say is less impactful than trying to focus on boosting your energy more consistently. And you do that through your goals. If you want to have more energy, just look at what you're trying to accomplish. Like, why does it matter that you want to take lots of successful trades? We sort of know what that is, obviously, but in that moment it gets lost and you get sucked into goals and motivations that are, the antithesis of it, which is, I want to be entertained at all times. I want to be interested at all times, right? That could be a driving motivation for you. It's, not really obvious until it becomes problematic, until there's a conflict between I want to make a lot of money and I want to be interested at all times. Well, how do you reconcile that with trading? It's easy. You want to make money more than you want to be interested at all times. Okay. And so that becomes how you're sort of driving yourself forward. So now what practically can you be doing at those times? I would try to come up with a game plan. What are you going to do at those times? Now, maybe you can watch a YouTube video for 2 or 3 minutes, right? So you might curate, a selection of videos that you can watch. And once one is complete, then you go back and you focus on trading for the next 10 to 15 minutes, right? And maybe there's some tasks that you could do, right? Where you could even do some back testing or look at other charts or, do a little bit of reading or research, right? There's specific tasks that you want to anchor your mind to so that you're not getting completely distracted. One of the biggest problems that I see, and this is not just exclusive to traders, it happens with a variety of professionals that I work with, whether it be poker players or golfers. It can be easy to allow your focus to drop too far down because you get so engrossed in that YouTube video or other things that may kind of capture your interest, and then it becomes very hard to just kind of turn it on like that, right? To just jump instantly from, let's say, level 20 to all the way back up to 50, right? So the practical steps I've given you are trying to allow you to let your focus wane a little bit at times, but then it's easy to kind of snap back in when you need to. All right. So the next question here, I'm going to bring up in a second another image here. Let me read the question first. Often on a winning streak or after a big win, I begin to start trading more loose and relaxed. This is often good, but it can also easily fall into not following my trading plan and rules because I have the mentality I'm up big and can afford to take more risks. However, this can easily lead to overtrading, overpositioning size, and revenge trading. Do you have any practical advice on how I can prevent this? So, we're looking at this graphic here. Where are they landing? I can promise you there's overconfidence at play here. Okay. I begin to start trading more loose and relaxed. You think that your relaxation is that your energy is dropping, but it's more that you're not relaxed on a physical level. You're now kind of pumped with adrenaline and too much confidence, right? The overconfidence is now kind of blinding you, almost as if like you're a little drunk here. Okay. And so this is the tool that I want you to use. Okay. This is what's called a mental hand history. And what I mentioned before to the first trader, how are you going to defend against your bad habits? You're going to do a mental hand history for each of the individual mistakes or bad habits that you typically fall into. Okay. And the mental hand history is basically just a problem-solving tool. Don't get too hung up on the name. It's something that I kind of created when I was working with poker players, where they would typically send a hand history, right? A complete record, almost like a trade, looking at your trade journal and sending one of your individual trades to a coach or a mentor to get feedback on it. Poker players would send the hand history to a coach to get feedback on it. So, with my clients, I have them send a mental hand history. Okay, it's just a name. Don't it's a tool to problem solve, to get at the deeper causality that's going on here. So, without going into too much detail on the tool itself, let's just use an example to kind of help you learn what that looks like. Okay. So the first step is to describe the problem in detail, which I've done with the first beginning of this question. And I've highlighted the section there that says, when I'm up big and can afford to take more risk. When traders are typically kind of completing this task, they will tend to get too focused on the technical rationale, okay, as we move through the different steps. And it's really important that you are focused on the mental and emotional side of this, because if you don't get to that side of it, you're not really going to solve the problem. Now, maybe there's both, right? Maybe there's the technical reason, which I think very easily could be true for you, right? Some technical weaknesses that need to be cleaned up. But, if we're not getting the mental side, it requires a combination of both generally in situations like this to truly be able to solve it. Okay. Now, the second step of the mental hand history, you've defined the problem clearly. The second step is to define why it makes logical sense that you would think, feel, or react this way. And this is a question that traders have a very hard time with. Frankly, people have a hard time with this because when they're making emotionally based decisions, they just naturally assume that it's illogical or irrational. Okay. And that is only true because it only feels that way because you are lacking the underlying rationale and reasoning and logic for why that behavior, that mistake, that action, that thought, that emotion makes sense. Okay. When you start to dig your way into your reactions, into your mistakes, into your bad habits, you will find underlying flaws, biases, wishes, illusions, hopes. The trader has asked a question that include the word hope in here. Okay. Hope is dangerous. Illusions are dangerous. Flaws are obviously dangerous. So for example, you might find like an illusion of control, high expectations, the confirmation bias, right? Hindsight bias. Traders are notorious for the hindsight bias. Oh, I should have bought Bitcoin in 2013, right? I was around it, or in 2016. There's so many instances. Obviously, a couple years ago when Buffett bought Apple, I should have bought Apple and just gone long. It's just so easy in hindsight because you have perfect information, right? But to generate hindsight into foresight is a completely different thing. And so hindsight would be another example of these underlying flaws, biases, wishes that we're looking to find. Okay. Now to get there, right? That piece of it is in step 3, but to get there, we need to understand the underlying rationale. Okay. And so for you, why does it make sense that when you are up big, you believe that you can afford to take more risk? Okay. And I gave a couple examples that might be true for you, right? This feeling like you're playing with house money, right? Doesn't feel even though it's sort of realized in your account, right? It's not unrealized profit, but it may be not realized in terms of, your actual personal bank account, right? The money doesn't feel tangible or real yet. It hasn't, taken on any real quality to it. So, kind of like a gambler, playing with house money, you feel like you can take more risk and can afford to do that because you're not actually losing your money there, right? And so then it kind of gets to the second point, which is that a lot of people, not just traders, a lot of people are motivated more by not losing than they are by winning. And some of this comes down to something that Daniel Kahneman, right, Thinking Fast and Slow, the godfather of cognitive biases, found that something called prospect theory affects many, many people. Okay, prospect theory says that people tend to be more motivated to avoid losing than they are to win. Why? Because losing hurts more than winning feels good. So you're more avoidant of pain than you are aspiring towards those good feelings. And why? Because that dynamic kind of makes that the ratio not quite equal. So maybe you are less motivated to truly achieve the goals that you want to accomplish and aspire to in trading. You're less motivated by that than you are to avoid losing. And so when you're not losing, then, well, you can do whatever you want because why not? You're not losing. So now we get to step 3 of this problem, right? And then this is where you get to describe the flaw in your logic. This is where you get to really define what is wrong with your thinking, what is wrong with your reactions. Okay? And then we get to step 4 and step 5, which I haven't completed because I'm not going to go through kind of a full assumption here. I could be completely wrong in terms of what the logic is, right? You can't complete steps 3 and 4 until you truly understand step 2, right? And the same thing with step 4. You can't do step 4 until you truly understand what the underlying flaw, bias, wish, illusion is, okay? And then step 5 is a bit of a bonus, right? Here, it's why is the correction in step 4 correct? Well, it's going to add a bit of potency behind it, okay? All of you would be benefited from completing mental hand histories. Okay? It's not a very complicated tool in theory. The complication comes in that you're just kind of limited in your knowledge, which is the mental game of trading was written to help you to complete this, because when you're able to kind of target the root cause, right, the underlying reason, the causality for why the problems that you see on the surface exist, then you can truly correct them and truly upgrade your perspective, truly transform a lot of the reactions and mistakes that you make. Otherwise, if you don't do this, you are condemned to managing them, patchworking it, right? The first question, I've got these habits and they seem to be coming back. Yeah, if you pull a weed out, but don't get the roots, it's just going to keep coming back. And this is why so many of you get sucked back under this bad behavior and mistakes and issues, right? Is because you're not really understanding the underlying causality. So the mental hand history is a tool to transform your perspective, transform your emotional reactions, so that you can automatically be more calm, more stable, more disciplined, right? All right, rant over, get to work. Okay, and Jack, you can stop the screen share there. All right, next question. How can I stop overtrading? How to protect my daily profit? There you go. Throw that right into step 1 of the mental hand history, right? Because you need to understand what's driving it, right? Why are you overtrading, right? Maybe it's a bit of greed. Well, what's driving the greed? Maybe there's this feeling that it's never good enough, right? There's no amount of money that's going to make you feel satisfied. Maybe then you're kind of managing a confidence issue, some perfectionism, right? Those are some examples of what is driving the overtrading. But those are questions that you have to ask for yourself and be really coldly honest, right? It's easy to BS somebody else. Sometimes it's even easy to BS ourselves. But look in the mirror and ask yourself, why am I overtrading? What is driving that behavior? And once you start to nail down that why, right, that's step 2, right, then you can start to get to the underlying flaw in terms of what's wrong here. And again, you may get some technical reason for it, right? So obviously, taking this many trades is not profitable and I'm not taking profitable trades, sure. But what's the emotional driver for it? Maybe there's just this deep desire to make an absolute ton of money, right? So of course it would make sense that you would be driven that hard to make it, but maybe it's not just the drive to make a ton of money. Maybe it's to make a ton of money now. Maybe there's an urgency behind it. And so then you lose all sort of the practical, pragmatic steps that are required, right? An understanding of the ups and downs. Like your account can't just go, kind of parabolic, right? Much like trades, right? Need to kind of keep forming these bases of support in order to like truly sort of sustain a rally, right? It's the same for you, right? You need your confidence, you need your skill set to continue to climb in order to support those big aspirations. Again, I'm just kind of theorizing for you, but generally speaking, everything I just said can apply to many of you. How do you keep emotions out of trading? You can't and you shouldn't. Okay, it's a myth, right? Go back to that performance stress curve. Jack, you want to throw that back up there again? To be at the peak, right, the very top of that, you need emotion, you need energy. Okay, emotion, when it gets contaminated by flaws and biases, that's what kind of converts it into volatility, right? Almost like a combustible chemical, right? That the anger starts to blow up in your mind. So yeah, you want to get rid of the anger, right? But sometimes for some people, anger is actually quite productive. Right here, we're talking about increasing intensity. I can promise you there are many professional athletes. I mean, Michael Jordan maybe is the most famous, who was motivated by anger, motivated by revenge, absolutely like convinced himself that, people were kind of out to get him, were against him, slighted him. And, if you watched the Last Dance, saw that there were examples that were truly untrue, but he needed it because he'd become dependent on it to fuel his best. He needed that emotion. And so when you look at other athletes, like they come out flat sometimes, right? And there's not enough energy there. Well, yes, as a trader, you're not, out there competing like football players, right? Where you need that emotion and it's a physical game but you see football players get too emotional and it becomes problematic, right? So there's a level for you and for traders where your emotions are necessary to drive that optimal performance. And so I think your question is more, how do you solve for all of the excessive emotion that becomes problematic, where you get down that right side of that curve? That is what I want you to game plan for. And so how are you going to do that? You're going to list out all of the instances where emotions cause problems, right? And let's say it's fear. Let's say it's some FOMO. Let's say there's a little bit of greed and overconfidence when things are going well, right? Use the things I've already started to say here today and begin to create a game plan against each of those individual things, right? You're not battling against emotion. You're battling up against excessive emotion, which is generated by underlying flaws, biases, wishes, illusions, hopes, right? All that crap is what's driving the excessive emotion. All right, Jack, you can end that there. Next question. How can I manage my trading after a bad family news? Dad has cancer, has only 1 year left. I've blown 2 funded accounts already since he told me. My God, my condolences and best to your family in this. So let's get you a bit more kind of cleaned up here and ready to trade. So first off, you might be dealing with some, baseline emotion that, needs to be addressed in a very kind of practical, personal, family way, right? You might not be dealing with the emotion around the news of your father, in a practical way. I mean, and that can be very, very difficult to do because likely you've never been in a situation like this before, and you're kind of grieving before you grieve. There's obviously time, but there's loss already, and so you need to deal with it practically. Part A. Part B, when it comes time to trade, okay, what I would strongly suggest is about an hour before you would typically begin trading, you're going to spend up to 15 minutes. You can't do more than that. And I probably for you would suggest maybe even up to 10 minutes. You're going to write down some thoughts that you're having about your dad, emotions that are there. And again, it can be a wide variety. They can change day to day. Okay. But the things that are kind of most pressing, most kind of close to you at that point, you're going to write them down. And the reason you're going to do that is because you're going to draw a line in your mind, right? Almost like a line in the sand that says, okay, from this point until the trading day is over, I am not going to think about him. I'm not going to think about anything related to sort of the family situation. And yes, I understand this is easier said than done, but if you've done the work, kind of outside of to deal with more of the personal stuff, you've done this, it's okay to give yourself a break. It's okay to give yourself like a mini vacation from the raw, sort of situation and the pain that you're experiencing. It's actually healthy because you're going to be able to be a better man, be a better person. I say man, but maybe you're a woman, right? Be a better person, for your family afterwards by having these little breaks, right? When you're sort of consumed by it, it's not healthy for anybody. Right? And obviously it's having an effect on your trading. So you get lots of benefits from this, right? You get a little mini vacation, you get to trade, enjoy yourself, right? And if you are able to kind of create the bubble that I've described, then at the end, when you go back to those things that you wrote down, and kind of put on the side, you're going to come back to them and come back to your dad in a way that's going to feel a bit more grounded and maybe still very emotional, but in like more of a kind of healthy way. Okay? I'm not saying this is easy. I am saying that as you do this sort of day in and day out, you will get better at it and being able to kind of create that space for yourself. But the bottom line is like you got to do that kind of personal work on the side, like whether it's on nights, weekends, or just taking days off from trading. Because otherwise the emotions will be just too raw, right? And any little thing is going to just like spark, some intense emotional volatility for you. All right, next question. I'll just check our time here. We got plenty of time. How do I unveil the thinking brain when in a trade I lose thinking capacity, even in a combine, not live money accounts? I mean, you're too emotional, right? Emotions can make you dumb. We've all been there, myself included. Emotions can make you dumb. And so that's what you're kind of battling with, because everything I've said so far today firmly fits in with what you're trying to do here. It's like, what emotions are affecting you, right? The thinking is gone. So the emotional system, right, when it gets overactive, has the power to shut down higher brain function. And that includes thinking, okay? Right, that whiteboard in your mind where you have thoughts, right? That shrinks in proportion to how much emotion has kind of crossed that curve, right? How much you're accelerating, even up to the point where if you are 100 out of 100, that's where the blue screen in your mind comes in, right? That's the blind panic, the blind rage, right? Those words blind in there, I think are quite, illustrative of the severity of the emotion that's present at that time. So much so that your thinking part of the brain is completely shut down. And neurologically speaking, that is true. When you take a brain scan of somebody, it's like dead inside. Now it's not completely, but that's effectively what's happened. And we can see in a brain scan too that one of those mental functions, in that higher brain function is actually used for emotional control. Okay, and when people are in an MRI, actively trying to suppress their emotions, it's called the prefrontal cortex. It's right in the front part of your brain. It is actively trying to suppress and control those emotions. Right. You can see it's red hot when the emotional system is not intensely overactive, right? When it's sort of, active, overactive, but still manageable. But then when it gets overactive, even that prefrontal cortex, becomes inactivated, right? And you no longer can control your emotions. So that's why it's so important to, better understand and have a game plan for what you're defending against with your emotions, right? And right now it's all kind of just a blur, perhaps, right? You need to be very specific about what emotions are being triggered, what are the situations that are being are triggering that emotion, right? What maybe thoughts are coming up in that moment? How are your actions or behaviors changing based on the situation? How is your decision making from a trading standpoint changing? Right? All of this helps you to kind of collect data around these situationally, and then eventually you can kind of create a bit of a map where it asks all right, well, what was going on before the emotions became overactive and before I lost my thinking? Because that's where you want to start to take action while you still retain that prefrontal cortex, while you still retain the ability to have emotional control. Because once that's gone, all the big mistakes that you make are basically inevitable. They are going to happen. Why is meditation helpful for a trader? So I'm not a massive proponent of meditation. Okay, I think there are some people for whom they kind of promote meditation as like an answer. And I don't see it as that in a lot of my work, but that's just kind of my bias. However, I do see meditation as a tool, and specifically as a tool to train your focus. to train your self-awareness and to train a bit more of let's call it like kind of mental strength, right? The kind of mental strength that you need for discipline. So all of those things can be aided from meditation, kind of like a workout for the mind, right? If you're going to go lift weights, right? Meditation is kind of like that. All right. And Hoag, if you want to jump into this question to see if you have any thoughts here. From a scale of 1 to 10, how important is it for a new trader to use a trade journal system? What's the best way to use that system? My opinion here is it's 100 out of 10 because, you've got to, the journaling is essential, period, right? At all stages of trading, right? And so, build good habits at the beginning. Because otherwise, how are you going to have any sense of kind of accountability and sense of feedback on a regular basis on how you're doing? So curious on your thoughts there, Hogan, and kind of what you would suggest in terms of the system.
I'm with you 10,000% on that, Jared. Any trader, no matter what level of experience or success or lack of success they're currently experiencing, yes, you have to journal. And I feel like we say this all the time. Everybody says that they journal, but I would suspect that probably 80% of people that say they're journaling are not. Like Jared said, you've got to journal. You've got to have some sort of a record, whether it's stream of consciousness, whether there's all kinds of tools out there to use to journal your trades. There's the facts of the trade. I bought it here because of this, and then this, and then this, and then there's the other side of it is, what is going on inside of you during those trades. And if you don't account for them and if you don't review them, you're basically just slowing your learning curve by not doing it. It's so important for traders to do that. I'm going to take a second and kind of mention the whoever it was that found out the bad news about their dad. Number one, of course, we're all praying for his and your family's comfort. I lost my dad a while back. I lost my mom a little over a year ago. So I'm kind of used to the idea of trying to separate that from trading. And I found myself almost feeling guilty because I wasn't thinking about it and I wasn't, just kind of trying to heal from it, whatever it is. And it occurred to me that you don't feel guilty about doing that. Don't feel your dad wants you to succeed. My dad wants me to succeed. My mom wants me to succeed. And they want us to do the things that are going to be a benefit to us no matter what. As a parent myself, I want my kids to succeed and I will do anything in my power and I will enable them to do anything that's in their power to succeed. So don't, be gentle on yourself and as difficult as it's going to be to separate yourself from that situation, don't feel guilty about it.
Yeah, that's great. That's great advice, John. And sorry about your mom, man. It's you're right. A lot of people do feel guilty in those situations, and to have the freedom to be able to continue to live is ultimately what they would want.
100%.
There's a degree. Obviously, you go the extreme opposite and have no care. Well, that's not healthy or even, optimal either, right? There is a balance. There's a father, and kind of finding that can be tricky if you haven't gone through it before.
Yes. Yeah.
All right. Good stuff. So let's move on to the next question here. I appreciate my question revolves around breaking past a profit level. Currently, I'm in the 50K trading combine. I reached the 2,000 profit level 3 times, and each time I would hit my daily loss limit shortly following hitting the 2K profit level. I was able to recover 2 times, but the last time I hit my maximum drawdown and lost my combine. I would only trade 1 lot trades, but when I was close to losing my combines, the second time I took a chance and increased my lot size. I backtested with 2 to 3 lots and was having some success. From then on, I decided to try larger lot sizes. I think this is what accelerated my last drawdown. Instead of taking 1 lot trades, I would take 2 to 3, hoping, there was that word I mentioned before, hoping I would make back what I had lost. I've noticed my tilt increase when I put on a trade exit early because I was fearing hitting stop loss, and my original hypothesis turned out to be correct. FOMO would increase exponentially Then I would force trades with 2 lots and hit my stop loss, usually in the opposite direction, yada, yada, yada. We all know this level of chaos that can ensue. So what's the problem here, right? I'm not saying that hope is the only problem that's happening here, but I am saying that when it is present, and another version of this is something that I would call the F it's, right? And this is kind of it, right? It's easy when you're kind of down to just say F it and you throw the Hail Mary and you try to kind of gamble your way back to profitability, gamble your way back to either maintaining or even passing a combine. And were you to be successful, right? What are you actually gaining? You know, it sort of suggests that you're hoping either for confidence or money. And that's commonly what I see. You're hoping by that kind of gamble that you're going to get either of those two things. And if you do, well, guess what? You've gained some money that's temporary, right? Lottery winners, 80% of them go broke in 3 or 5 years. And why is that? Well, because they don't have any skill managing money, you know, and they don't know how to manage the pressures, right? The classic more money, more problems, right? And all of the things that kind of come with it. They don't have the skill. So if you're going to gamble to make money in trading, what have you done? You've reinforced bad habits. But in our mind, it's very easy to think, well, I've got the money now. I passed the combine. Now I should be good. No, and not if you don't have the skill. You've actually made yourself less likely to be successful by gambling your way to get there. Okay? In the moment, it doesn't feel that way because that hope has convinced you, right? The lack of confidence has convinced you that by getting the outcomes that you want, you can change and prove. So you can change yourself psychologically and you can prove that you have the skill to trade. Okay? Yeah, you have the skill to trade, but are you a trader, right? Have you actually harnessed and focused your skill sets in the right way when it is hard? Who can tell you? I mean, you're in the trenches and it is really, really easy to succumb to bad behavior. But when you do that, that's how you either have some of your biggest blowouts or you truly don't gain anything having kind of done that so poorly. And it is kind of the classic like weightlifting analogy here, right? When it is hard, that's how you know that there's a lot to gain, right? We don't want it to be like an insurmountable weight for you to push here. But I don't think what you're asking yourself for is truly that hard. It feels hard, right? It's like the last couple reps in a set, but want a set that you can do. But the hope is a give up, and it actually reinforces and perpetuates a lack of confidence in your strategy. You need to double down on it and pass the combine the right way. All right, next question. I work a full-time job that's super demanding and causes a lot of stress. That stress bleeds into my trading and how I trade. Do you have any tips on how to handle that stress to where it doesn't affect my trading? Kind of like the personal issue, right? The dad thing, where you got some either stress or emotion that needs to be kind of put away. So what you're doing is you're kind of doing a cool down, right? You're giving your mind a chance to kind of decompress by taking those notes. So practically speaking, maybe there are thoughts that are kind of still in your mind about your job. Maybe there are tasks that need to get done tomorrow, and there's either a need to kind of write down those tasks or write down some of the thoughts that you've had about them. But I can promise you that some of the fatigue that you feel, having made that transition from that demanding job to trading, some of the fatigue that you feel is not physical fatigue. It's what I would call bloated brain. Okay, and traders experience this too, right? When you're at the end of a trading day or even at the end of a trading week, if you're not properly doing that trade journal, right, properly digesting and kind of decompressing from trading day over day, right, you're going to feel more fatigued because you got more stuff crammed in your head. So here you are in a super demanding job. At the end of that, right, the momentum of all that data, right, is still in your head. You don't have the space of the room to now interface with the markets in a way that you truly where you can absorb market data and make decisions, right? You don't have any room. It's like a sponge. It's too saturated. How are you going to put any more water in that thing? You got to squeeze some of that water out. Make some room in that sponge. And that's what you got to do at the end of that trading, at the end of your job. Maybe even throughout your daily job, you're going to take 2 to 5 minutes to take some notes down. So the accumulation of that is not so profound at the end of the day that you're just now consumed. It's going to take you, a half hour to an hour to kind of fully, change direction, right? Because you got to do the cool down, then you got to give yourself some time to rest. Then you got to get yourself reoriented to trading, get your motivations aligned, get your strategy kind of warmed up and aligned, game plan against any emotions that may be present, right? Things like that. So you got to make that transition, right? You're trying to turn on a dime, and it's like trying to turn a cruise ship, right? This is not like, a car. You just turn around and go the other direction, right? You can't just get done with that job and immediately start trading without having any kind of process for that. And what I've just given you is one that can work. Outside of drafting the trading plan, do you have any tips to get your mind prepared to be disciplined and emotionally centered for the trading session? So, what I was just beginning to sort of talk about now is exactly that, right? What does that warm up look like for trading? For me, from an emotional side, you're reviewing your goals, not just the headlines, but the whys behind your goals. Why do you care about making this amount of money? Why do you care about, goals don't always have to be P&L related. It could be, I want a certain level of proficiency and execution with my strategy, right? I've got clients who will, set, kind of a benchmark, right? Where they want to have 20 trades in a row that are executed perfectly. And it's kind of like that, classic, how many days till last accident in a manufacturing facility, right? And every day where there isn't one, they throw up that number, right? How many trades can you go before, disaster strikes, right? And so that becomes like a top line goal. Okay. Then like the why behind that, what's really driving that motivation? The why is really key because it helps to kind of further narrow your focus on the trading day, right? Keep your mind centered around trading and making it the most important thing in your life at that point. Now, is it the most important thing in your life? Probably not. But at this point in time, it is. And that's okay. Like, allow it that way. And if there are things that can tend to bleed in, right, and be distracting, right, you got to block that stuff out, right? This needs to be the only thing that matters in your life. And if there are emergencies, obviously you can find a way to be accessed. But for the most part, it's like, you got to make this rock solid, and your goals are the primary way to kind of create that insulation, create that focus, like a laser beam in a sense. Right? So goals, why behind your goals, read them, review them. You're not making them spontaneously on the moment, right? They shouldn't be that new every single day. Right? Okay. Number one. Number two, once you got your focus narrowed, now you're going to, let's say, okay, drafting the trading plan, sure. But now you got to review your game plan to defend against the big mistakes that are typically going to occur in executing that trading plan, right? Is it FOMO? Is it greed? Is it anger? Is it boredom and distractions? Is it, the inability to sit on your hands? Is it, just the tantalizing pressure that it takes to like sustain these like mind-eating trades that just won't either stop you out or hit your target, and you can't, right? So you kind of bail out prematurely just because you can't handle the uncertainty, right? What are the problems? What are the situations? You got to have a game plan for that. If you don't have a game plan, then you got to create it so you can do this as part of your warm-up. Because then you're basically kind of going in like hoping to be able to defend against those problems, right? The game plan mentally and emotionally is equal to your trading plan from a technical standpoint, right? You need to know and understand like what you are defending against, or if you're trying to be at your best more often, like what are those factors that help to produce it? Right, have a game plan for that as well. Okay, right. Mental, emotional stuff is not random. I think many of you maybe feel like it is because you haven't taken the time to see the predictability in it. Right, just like many non-traders who know nothing about TA would say, "Oh, well, the market's random. Like, how could you possibly make money? You're just getting lucky." Well, yeah, I'm not like. It's a probability game, right? Yes, there's luck involved in the short term. But if I've developed a strategy that's proven to be profitable long-term, right, it can, move through different market regimes and still churn out a profit margin, much like a slot machine, right? Built-in edge. But I'm here now. I'm the slot machine. I'm the one that's got to be executing this. So if you got that kind of strategy, well, in what way can that slot machine get impaired, right? As you as the engine of, or not the engine, but you as the executor of that strategy. Well, that's what you got to be defending against. All right. I have a few good days and then 1 to 2 bad days and give back all my profits and more. Is this a self-sabotaging, overconfidence, greed, or euphoric problem? Yes. I think given the question that came in before, right, overconfidence is typically the thing that happens most often. The one thing I would correct, though, is self-sabotage is a completely BS term. It should be deleted from the planet. Because the only true self-sabotage comes when you have enough skill to actually be able to undercut your own abilities. What you were describing and what many people describe when they say self-sabotage, which I say again is BS, also because it implies a level of self-control, as if you are doing it to yourself, which is freaking overconfident. You do not have control over undercutting your own success. You're undercutting your own abilities. No one does that. The only one that I've seen, is like a comedian who, like a Chris Farley, can undercut his own success for maximum comedic effect. I don't mean that in the demise of his career and his life. I mean that in terms of like his actual stage physical comedy, where he would physically do things to look dumb but was amazingly funny, right? That's like a self-sabotage. This is not self-sabotage. You don't have control. So what you've got to do is better understand what those impulses are driven by. All the things I've mentioned so far today, kind of firmly fit in that category. All right. I normally trade high volume profiles with value, high, low, and POC. Always do great in the sim, but not in the combines as I'm going through my journey the last few months. My weakness is to come out of a position with little profit rather than wait to hit target based on my analysis. What's your one advice for me? The fact that you're looking for one piece of advice is actually the problem, because you think that there's magic in a bottle. Easy solutions can be found. Yeah. My bad Vegas stage singing. No, there's no silver bullets here. You can't that does not exist for complicated problems. Now, I'll give you a piece of advice, which is treat the combine, treat the sim, as live trading, and better understand and map, profile the problems that you're experiencing, solve them the way I've talked about today, right? There is something unique though about the sim and about, actually trading for real, which is you may not be as well conditioned for the inherent stress and pressure that trading exposes and brings out, right? Here you are watching an NFL game, and then tomorrow, you get plucked in. GM makes the call, says, "Hey, we need a kicker. You're in." Okay, now you got to kick a 40-yarder for to win a game for the team that you love. How are you going to do it? You're telling me that would happen to you and you wouldn't feel any pressure? An overwhelming amount with 80,000 people plus millions watching on TV? Of course you would. Well, many of you have cash, and you're like, "Oh yeah, I want to go play in the NFL. Here's my cash. Let's throw me in, coach." And that's what you're doing when you're joining these habits. It's like you are entering a marketplace that is the most competitive in the world, that exposes underlying weaknesses and vulnerabilities with very seasoned, successful traders, and you think you're going to show up without feeling any stress or pressure, and it's just going to be kind of easy and a cakewalk. You got to be delusional for that to be true. So part of this is just getting yourself conditioned to the natural intensity that is part of trading, and having it be okay, but then not having that inherent pressure and intensity wear on your strategy. So part of this is probably that you also need to strengthen not necessarily the tactics that you're using. Now, that may very well be true, but your internalization of it, right? Could I wake you up at 3 a.m. and have you tell me what it is like that? My guess is no, which tells me that it's not ready for prime time and being able to be tested under the bright lights of real trading. Now, we've got time for a few more questions here. Is finding a strategy and sticking to it all it takes to become an expert trader? I found my strategy and it seems to be working. Back testing it for about 3 months. I even passed a combine with it as well. And all right left now is to control my emotions. But it just seems so good to be true, and pure beginner's luck, and a losing strike will come back and leave me broke. What do you suggest? And overall, keep looking for other strategies to use in parallel with mine, or just stick to my strategy? John, I'm sure you've got some thoughts here, but from a mental emotional standpoint, right? all that is left to do is control your emotions, makes it, again, I think a bit too sort of simple for, kind of what this actually is, right? There's a continual evolution tactically and mentally that's going to occur, right? There is no sort of solving it. So yeah, don't just simplify even just the mental and emotional side, because there is complexity. We've talked about a variety of complex issues here. These are things that are not going to get solved in a day, a week, likely a month, right? Long-standing habits take some time to really understand before you even game plan. And then once you create a game plan, then you got to test it, see how well it's going to go. And that's the same kind of thing you've done on a trading side. So I'd say, kind of getting yourself in a position where you can have more control, have more command with your emotions is a great next step. But you got to be prepared for an ongoing evolution with your trading strategy as well. What do you think they're doing?
Jared, can you reiterate the first part of that question, if you wouldn't mind?
Yeah, of course. Yeah. So I think the idea here was, right, testing kind of a strategy for 3 months, but it seems too good to be true. Like he's doing well, but has this kind of fear that like a losing streak is going to leave him broke, and it just kind of feels like beginner's luck. So I feel like there's some element of like novelty to the strategy, but like a feeling like there's like it's all kind of could easily kind of fall between your hands, like grabbing a handful of sand. Right.
And it's all happened to me in the past. So what it sounds like is he's really aligned with the market state, with the current strategy he's in. And it will change. The markets will change. I always say that, when you get the right answers, eventually the market's going to change the questions. The question then becomes, how do I recognize when that change occurs? Well, it could be a series of losses. It could be a series of days of losses. But the one thing you don't want to do is continue to trade a strategy that is now proving not profitable. It's of course subjective. You don't want to abandon a strategy that's working. You may need to change one little gentle trajectory of that strategy. If the market's range bound, I'm usually a very good trader. I'm focusing on the extremes, fading those extremes until proven wrong. When the market's directional, I have a harder time, and I know this. So I try and, be selective in the opportunities. When that strategy is working, work the hell out of it. Don't worry about when it's going to change. Work it until it changes, and then make your gentle trajectory changes in it.
Yeah, that's great. All right, maybe we got time for one more question. Maybe two. This next one could be, what is your dominant internal voice, mostly positive or negative? If positive, is it natural or trained? I would say people tend to have a dominant style, right? Neither is bad. Okay. And you might think that negative thinking is bad, but there is research to show that, quote, like negative thinking for certain types of people is actually quite good. Okay. And they did this with research for, people kind of learning to throw darts. And so people who were defined as like kind of being more naturally optimistic, if you gave them positive reinforcement while they were learning darts, they did better than when they got negative reinforcement. And then on the flip side, people that were naturally pessimistic, if you gave them positive feedback while they were learning to throw darts, they would actually learn worse. Their performance went down versus when you would give them kind of constructive criticism and feedback. So negative and positive thinking, they're not good or bad. It kind of depends on who you are and your predominant style. Me personally, I would say I'm like an opportunist, right? I'm a pragmatist. There are times where I might be, positive and feel good and, kind of have thoughts that are kind of aligned with that, but I'm never, I'm kind of cautious that I can get overconfident, because that is something that can happen for me. And then on the flip side, when I've, F up and make mistakes, like the criticism is pointed, it's never like demeaning. I'm not getting mad at myself. I'm getting mad at the action. I'm getting mad at what happened. And then I'm using that as fuel to understand what the heck happened so that I can correct it and make sure that it doesn't happen, again and again. I don't know. Yeah, John, how would you say your internal voice tends to be?
Well, I'm very, very good at haranguing myself in sometimes not very nice ways, which is something I'm continually working on. We always a lot of folks talk about having a positive mental attitude, this, that, the other thing. I think that the negative internal dialogue can sometimes be really damaging, because a lot of, I found, what I say to myself in negative internal dialogue is lies. I am not the worst trader in the world. I am not the ugliest person in the world. I am not. So there's a book called Positive Intelligence. I don't know if you're familiar with it, but I read the book. It was given to me actually by Michael Patak, and it says that all those internal voices they call them saboteurs, and they harangue you to the level where they're lying to you, but if they harangue you enough, you start to believe it. And to talk back to them, basically almost with like a mental hand technique, is, okay, the judge is telling me this. I know that it's not right. So I tell the judge, you're wrong. That is not true about me. And that every time you do that nasty voice gets a little bit dimmer and a little bit dimmer. Yeah, there's good things that we can give ourselves as far as criticisms that are going to help us. And it's also, like you said, the other side is, if we think we're God's gift to trading, well, every time I've done that, I've found that there's a lot of danger at the door. So I think it becomes a place of humility. You have to understand you're not perfect, but you can't let your internal dialogue beat you down. And you also, and when things are going well, you can't believe that it's going to go that way forever and you're God's gift to trading and you've got it now and you don't have to do any of the work anymore because things are going so well. It's coming back to that center, that humility to say, I don't know what's going to happen. I've got a strategy that I believe in and that is going to work. I have to trade that strategy, no matter what I'm being told inside my head, to be able to prove to me that it's right and that it will continue to profit over time. So, I've been historically absolutely brutal in my internal dialogue, and I feel like I'm a better, happier person, which should make me a better trader. When I talk back to those really negative things, constructive criticism internally, yes, very important, right? And then again, you get ahead of yourself, you get full of yourself, and every time I've done that, I've just been whacked.
Totally, yeah. No, and I love the talking back to your internal dialogue in both sides. The way that I would maybe have it evolve, either for you or for others, also is when you kind of can understand the inherent kind of lie, then you can kind of figure out, and that's where the mental hand history comes in, what is truly flawed. Because if you have the thought, you're the worst trader in the world, like what is flawed about that idea? Number one, you have no way of knowing. Number two, even if you did, you have a ton of evidence to support, right, in going to that judge to say, I may be the worst trader in the world today. Let's just even say that was hypothetically possible.
Right.
But here's all this evidence to show that I was not the worst trader in the world prior to today. So is it possible, is it plausible, Your Honor, that I could go from being a successful trader that's clearly in the top 1% to going all the way to the very bottom of all traders in the world like that?
Sometimes it feels
so
like
what it does is it kind of like, I think, is like a ninja way around, because if you kind of battle head on with those negative thoughts, or even the positive ones too, you're going to have to keep doing that again and again and again, because they're just going to keep coming back. You're just going to keep having that fight. And sometimes that they're going to win because they're emotionally driven.
Right.
And so when you can kind of understand the underlying causality, the flaws that are really embedded in there, right? Here you are lying to yourself. It's straight fiction. So what's the basis of that fiction? Well, there's a lot of people that have what's called black and white thinking. They think they're the worst or the greatest. They think that, they're never going to make money. They can't see how they'll ever lose money, right? And that black and white flaw is very, very common. That's what's happening in that moment. So by talking to yourself in the way I described, you're basically blowing that thing apart, right? That black and white now starts to have a bit of gray to it, a bit more nuance to it. And that's how you evolve and have your thinking like automatically begin to change, because you're not just changing what you're thinking, you're changing the nature by how your thoughts are even constructed.
Love it. Love it.
All right. Well, I think we're kind of short on time here. So
I think we are as well, but thank you, Jared, so much. We're going to cut this out and post it to YouTube because we got so many requests in there. So always a pleasure.
Awesome. Yeah. Well, good to be here as always, guys. Well, until next time, wish everybody well.
So
Jared,
right now.
Thank you. You're the master. Always appreciate you being here. And thanks again.
Thanks, John. Appreciate it.
Right now, we're going to transition to a little coffee break before we go to top quiz. I'll get my screen up as soon as possible so you can join. It's all about market profile today. If you get more than 3 or 4 right, 3 or 4 or up, you are randomly entered to win one of 50K combines, because it is Bring Your Friend Week at Topstep. So get in there. I have to switch right now this coffee break. Jared, thanks so much again. See you next time.
See you guys.
Hello, party people. Welcome to Top Quiz Market Profile Edition. I am Jack. I am joined by not Hogue, the market profile expert, but developer Alyssa. Alyssa, how are you doing?
Hey, Jack. I'm doing pretty well. How are you?
I'm doing excellent. So there's going to be either 7 or 8. I can't remember how many questions for this. If you get at least, say it's 7, if you get at least 3 right, you go into a drawing in which we're going to give away 50K combines randomly to people that are in this. And that's because it's Bring Your Friend Week. So trade with your friends, bring your friends, and be rewarded. I'll give a few more seconds for people to get in. You go to kahoot.it, enter that PIN. There is a limit of 2,000 people in this. We've never come close to it. I don't foresee it happening today. What do you think, Alyssa? We're at like 540 right now.
Yeah, it would be tough to get there in the next couple of seconds, but you never know.
It would be. Well, we got 5,000 YouTube subscribers yesterday. They got rug pulled from us. I'm sure it wasn't some of the people just asking for resets over and over again in the comments.
It couldn't be that.
No, couldn't be. Seems so level-headed. All right, but this will be a fun way to do it. They're about market profile. Hogue gave a great hour-long session of the market profile yesterday. So these will be questions based on that. In fact, this quiz today is written entirely by Mr. John Hoagland.
Whoa.
Yeah. All right, Alyssa, who's going to be last in here? It's probably kind of Fast and Furious. Kasiri, Nisi, Garrett.
Yeah, that's a lot.
Suburb. Jeez, Louise.
Top B.
All right, be amazing. Well, we do this every day. So we're going to go ahead and end it in just a few moments here because we got to get the group coaching. All right, Alyssa, who's last in? I can't even tell anymore. I can't read. It's going too quickly. But we got to stop it right now. And we are going to start with the quiz. Kahoot. Market Profile Edition. Remember to look at your device, not wait for us to say it because there's a delay. Question number 1. What does the acronym TPO stand for? Trade place orientation, take profit objective, time price opportunity, or turn price over?
Ooh, I'm stuck between most of these. I'm kind of feeling time price opportunity.
Well, you are correct. Now, we reveal our leaders so far, but remember, just because you win doesn't mean you win. We're randomly drawing from people that get at least half right, we'll say. Okay, next question, Alyssa.
Let's do it.
A buying tail represents what? Sellers, excess, the end, or part of a pet?
I like the part of a pet. I'm going to go excess.
That's correct.
All right.
Man, you're 2 for 2 here.
Hogue, you should be so proud of me.
Exactly. Okay. See the scoreboard here. So there are 7 questions. So let's say if you get at least 4 right, I'll see how many people do it. It'll be 3 or 4. You will get into the random drawing. So worry not. All right. Next question. The first hour of a trading session is called the opening range, the opening auction, time to wake up, or the initial balance.
I like the time to wake up. That's what it is for me. Opening range?
It is the initial balance.
Oh.
And remember, these are questions from Hogue, so don't hate me. I believe he sees the opening range as 1 minute and the initial balance as the first hour. Once again, anyone who doesn't do it, it's Hogue, not me. Shaggy style, it was not me. Let's see. Ash, Sifu, some effing guy is up there. Good for you. All right. 2 for 3 is not bad, Alyssa.
I'm feeling pretty good, Jack.
The point of control could be considered the fairest price of the session, the middle of the range, the piece of crap, or the price of contract.
I again like the piece of crap. Is it the price of the contract?
It is the fairest price of the contract. Price of the session, sorry. So, no, 2 for 4. That's okay.
That's all right.
1 second. I'm just looking at the YouTube comments to make sure there's nothing crazy going on. All right. Remember to look at your device, by the way. I think there's a lot of new people in this because that's where the questions show up. We have a 6-second delay on YouTube, so there's that. Did I just freeze? Okay.
I think you're okay, Jack.
Let's see the leaderboard. We got just a few more questions here. Bobby Baby, girl on the rocks. She medium trades. Schmedium. Next question. The constant in the market profile TPO is time. What is the variable? Is it mindset, strategy, price, or process?
Obviously the price.
Yes, that is correct. Hogue wrote these, and I'm pretty sure only price is the only one that's a variable, so that's good.
Right.
All right. McFly is up there. Checking the comments real quick. Cool. Next up, 2 questions left. A weak high or low lacks this. Excess muscles, any odor, conviction.
I don't know. Excess? Yay!
Once again, any complaints with the questions, take it up with Hogue. Send it to hogue@hogue.com.
Mm-hmm.
Yeah. Radio Flyer enters it. Ash still on top. We got 1 question left, I believe. You ready?
I'm ready, Jack.
The volume and market profiles are based on what theory? Pythagorean, evolution, Gaussian bell curve, relativity?
Well, definitely the bell curve.
Yes, it is the bell curve. I think you would have qualified for a combine.
All right.
That's pretty good.
I'll be reaching out for it.
All right. For bragging rights, remember, we're drawing winners randomly. Sifu in 3rd. 2nd is Ash. And in 1st is my very good friend, McFly. So what we're going to do right now, since it was out of 7, and I want to make sure that there's enough people. If you got 3 right or more, you're entered into the drawing, and I will email you this evening with a free reset code. My mouth's getting dry, Alyssa. I cannot talk.
That's all right, Jack. Right there with you.
All right. So, hope you had fun with Hogue's market profile quiz. Thanks for bringing a friend. And we are going to take a quick break to get set up with group coaching with Coach Dakota, which is fun. Right, Alyssa? You sticking around?
It's so fun.
All right. Always a good sport. So we'll take a quick coffee break and we'll be back with Coach Dakota. Hope you stick around because we'll see you then.
Bye.
Hey, can you hear me? How are you? Okay, perfect. Let's see. We're on YouTube Live. How is everything going on your end? I know we're starting a little bit late. I was able to catch some of that top quiz, and I didn't get in. I'll have better luck next time. I'm usually waking up about right now because I'm one of those Asian session traders that will stay up most of the night here in the US. But that's one of the great things, and that's what I'm hoping to talk about during our group session today. And I'm hosting a class. I've called it Slow Markets. We are online on Discord every evening, Monday through Thursday, and we do some live analysis of the markets, and we talk about a new concept. Well, it's not actually new, but from what I've been able to tell, it's new to a lot of traders here at Topstep. So let me give you guys a little bit of a background of myself and the way that I came about setting up this class and the reason why I've set this class up. So if you guys have seen me before, I'm in Discord. I'm one of the performance coaches here at Topstep. I've been trading for 13 years. I've been trading since I was 14 years old. And the way I was able to do that was my mom, she had a old Scottrade broker's account. And in order to trade when you're under 18, you have to get sign off. And I started playing around since then. As soon as I turned 18, I was able to open up my own brokerage account. Any chores, part-time job that I had working at Walmart here in Utah, I just put towards my brokerage account and was playing in the market. And once I graduated high school, I went to college. And the biggest issue that I found while I was going to college and having a part-time job was my availability to trade. And as you guys could imagine, here at Topstep, and you guys hear day traders and traders all the time in any educational class, and one of the most common times to trade is during the most volatile time of day, which is the New York session, or New York, London overlap, just anytime during the markets when the New York session is open. So the issue with that, having a part-time job or going to college full-time, is that you don't have the time to sit in front of your computer screen and watch the market, trade, and sit there for hours, because I have school, you have a job, you have whatever it is going on in your life. And I had a problem with that because I was really passionate. I wanted to trade. I wanted to become a day trader, become investment. I was going to college for finance. I got my finance degree here at the Utah State University, and that's all I wanted to do. However, I never had time to do that, and that was the biggest issue for me, because it's one of those self-reflective type things where I want to trade, I want to be a day trader, but I have work, I have college, and I need to make a decision in my life. What should I focus on? And I wanted to focus on college, of course, because I have those conversations with family that what's my right path, And of course, when you're talking with family, they want to make sure that you're going and getting your education because that's very important. And I was able to pay for that. And my family was helping me out, of course. So I discovered that trading during the Asian market and the London market was very, very slow, and it was boring, and there was not a lot of education out there. And there's not a lot of traders who traded during that time that put out the education for me to study and learn and try and understand how to trade during the lowest volatile times. And it was difficult, but I just kept trying, and it took me for a long time to get used to it, to be able to develop my trading plan, develop my trading strategy, and to figure out how to trade the Asian markets and the London markets. Plus, I college student, lacking sleep, living off energy drinks and all that. So I was up during the night anyway, wake up in the morning, go through a part-time job in college, and then try and figure out the markets right before I go to bed. And I didn't have a lot of time. So that was my biggest hurdle. And that was the number one thing that brought me to have my class in the afternoons here at Topstep and call it slow markets, to help traders understand that Topstep's a global company. We do have traders around the world, London, China, the Asian, just everywhere, different time zones. And I could imagine that with traders coming from so many different backgrounds, we don't always have the time to trade the New York session, to trade the New York Open, or trade when, the most opportunistic time that we're taught when day trading is there, because we have life, we have kids, we have family, we have whatever it is going in our lives. And maybe the only time you are available is during the afternoon, whether it's the Asian market, or maybe you're on the other side of the world and you're just available during the London. So that's such a hard thing. And I got into a bad habit sometimes of trying to force myself to wake up and trade the New York session. And every single time I did, it would just end badly for me until I was able to get used to this Asian market. And that's the last thing that I've ever experienced in terms of dealing with my struggles for my time. And I started to see that here at Topstep. When I first joined Topstep, there was a lot of traders reaching out to me on Discord and talking, I have a job, I'm sleeping when the market is open in New York because, for me, it's midnight when the New York session is open, or, everyone has their own specific time zones and when they're available. And I started to notice a pattern here at Topstep that, we are an international company. We have traders around the world, and that's a very common problem, maybe more common than what I first realized. And talking to the community, that traders really want to trade, and they might not even have the time to trade during the New York session with our team members here on TopstepTV. And so that gave me the idea, because we have that, need, that hole that traders are wanting to fill, is how do we trade and how do we look at the markets during the times that people are usually not awake during the day trading hours in New York. And so that's where I came up with slow markets. The markets are slow, it's not volatile, but I've traded them for a very long time. And I realized that a lot of traders did not understand that you can trade those markets. There's a lot of opportunities in the futures market. I mean, it is open and we can trade it here at Topstep, 22 hours a day. And it doesn't make it so that we could only trade during the New York session. Sure, it's a lot more volatile, but there's also opportunities to trade during the Asian markets and the London markets. If you guys have joined any of my classes over this past week on Discord, there is one night, I think it was a couple nights ago, where we were just sitting there talking about the markets, and it was really moving slow. And then just out of nowhere, the market just jumped. Gold rallied, oil rallied, all of the indices rallied. And we had no idea what was going on. It was very random. It was during the Asian market. But some of us were there, and we were able to take advantage of that type of a move and that type of opportunity during such an odd time. Because, there are so many different opportunities outside of just the New York session in the mornings where people are trading. So that's been an interesting concept and a fun class to start providing for some of our traders. I've got a lot of feedback for it. Traders are loving it. It's a new concept to many. I've talked to some of other coaches like Coach Ray, that I think he was on here the other day talking about, what's the idea of what a day trader is, right? You don't have to be there during specific times. We have 22 hours to take advantage of opportunities in the markets, because the markets are always moving at different paces, slow or fast. The one thing that I do and that I did come to love about the Asian markets is that it's slow. I was able to go to college, I was able to finish my part-time job, and then I'd come back to my apartment and I can sit there in front of the markets and I have time to analyze the different markets. I had time to calculate my risk and to set up these trades. And I didn't have to really worry about the markets moving so fast and all this news going up and trying to react and think really fast. I had the availability and the time, with markets being very slow, to sit there and to analyze and to calculate my risk, calculate my reward. I was able to use technology like the different orders, right? We all know about the buy stop order. We know about the limit orders. We know about the bracket orders, where you could place, say, a stop, and then as soon as it's triggered, it will immediately give you a stop loss and a take profit. So we have all these different type of orders that we can use as traders in order to take advantage of the Asian and London markets. So that way we could sit there. I was coming home from work or school, and I will spend about 2 or 3 hours sitting in front of my computer screen analyzing the markets. I'd set up different trades, and then I'll turn my computer off and go to bed. Or I would just turn my computer off or start studying. And I would wake up in the morning, and I know that for a fact that I've set my trades up. I know what my risk is. I know what my reward would be. And I know the 3 outcomes that I would wake up to, right? I would either get triggered into my position and make money. I know exactly how much I was going to make if I made money, or I'd get triggered in my position and it will turn around and hit my stop loss. That's losing money. I know exactly how much I was going to lose if I woke up in the morning, or maybe the market just does not even trigger me in, and so I don't even take a trade that night. But it helped me control my emotions, because when you're sleeping or when you're at work or at college and the trade and everything that you've already set up works without you sitting in front of your computer screen, you don't have that stress as a trader to micromanage your trade. You don't have to be sitting there watching you get entered into a position and then just watch the dollar amounts go up and down. And so it was a lot less emotional for me, and it was easier for me in terms of my schedule, and gave me the ability to have a full-time job or have a part-time job, or continue with my college and get my education while learning the markets, developing a trading plan, and develop a trading strategy. And yeah, I've loved the class that we've had on Discord, and I'm continuing to do it. It's going to be, like I said, Monday through Thursday, right around 8 p.m. Central Time every single one of those nights, and we're going to be doing the same thing. One thing that I've got is that it's really competitive or repetitive. It can be boring. We're doing the same thing every single night. The markets are slow, and that's not necessarily a bad thing with anything in life, right? The better you get at something and the more consistent you get at doing that thing, taking, for example, a sport, right? If you're playing basketball, shooting free throws, you're doing the same thing over and over and over again. And when you start getting good at it, it becomes repetitive, it becomes boring, and it's no longer as fun as it was when you first started. And I started to get that. That's just the way it goes with almost anything that you do, which can be a sign, and it's really, really a good thing for us as traders, because at the end of the day, that's what it is, right? We want to become a trader. We want to do it for either a full-time or a part-time. and have it as either your full income or supplementary income to your job. But doing it correctly, it can be boring. Making sure that you're doing it consistent, doing the same thing over and over again, very systematic. And that's just the reality of it. I mean, at least for me, right? There are some traders out there that, they're very excited to trade the markets, just like any other job. I haven't worked a lot of full-time jobs. I haven't really worked a job. I'm relatively young, thank goodness. And I hear all the time, I get the advice from my grandparents, from friends that I work and I trade with was, have fun with your job, whatever it is. If it's not trading in the stock market, if you're working, say a truck driver, if you're a truck driver and you absolutely love driving truck. I have a friend that is a semi-truck driver and he loves it. It's boring because you're doing the same thing over again. You're sitting behind the wheel and you're just driving, but he absolutely loves it and he doesn't look at it as work. And I kind of believe the same thing in trading, right? It could be boring. You're doing the same thing over and over and over again. But if you love what you do, it's fun. It can really be fun. I'm going to try and answer some of the questions that you guys have. Feel free to ask questions as I go through this. I know we're a little short on time today, but I will always encourage you guys to join our Topstep Discord. We have all of our coaches there. We're holding classes. We have at the buzzer right as the market closes. There was a few times we had all 5 of our coaches on at the same time analyzing the markets. Once it closed, I hold this slow markets class Monday through Thursday at 8 p.m., which is really fun and enjoyable. And we go through any questions. We're talking about the different strategies and the different concepts during the Asian market and being able to trade during the London market. I usually call it like set it and forget it trades, right? You analyze the market, you place your orders, and then you just forget about it. That's for me the most emotionless trade that I do, the best strategy in terms of controlling my emotions. And I like to think that when I do have those good nights, you wake up in the morning and you wake up to money, right? That's always the exciting part and some of the advantage of it. There was one trade last week that we analyzed and we talked about it on oil, and it had a really good risk reward. We were risking a 6-to-1 trade, and I like to risk 0.25% of my account, and we were basing it off of a $150,000 Topstep combine, which is about $375 for the risk, and the reward was just over $2,200. We set it up, everything. I went to bed, we woke up, and the trade was just really great, right? While I was sleeping I think it was during the London market, when a lot of traders here in the US are sleeping, it rallied up. We woke up to $2,200 worth of profit. And so that was nice. So we have some questions here. It says, do we have recordings of the previous sessions on Discord? Yes, we do have a coaches library here in Discord. So if you haven't joined the Discord, join it. And we have great traders there. We have a great staff, and feel free to ask any questions. They'll be able to direct you where to find our coaches library or any of our individual coaches channels that you could ask questions. We could talk about the market, and we'll be able to help you guys, hopefully become a better trader, ask questions. And we're always holding live events, starting in November. We've been talking about holding some set classes, talking about risk management, talking about psychology, talking about the different issues that traders have when going through their trading journey. I've held some psychology classes. That's been really fun because, I've experienced a lot of those downs, on top of the upsides, on the psychology side of trading, being very emotional, because trading can be very emotional. They were like 3-hour long sessions, right? Would split up in 2 hours. and they're also posted on our coaches library. Whenever our coaches, we have a class, we record it and we post it. So that's a really huge value add that we have here at Topstep on our Discord, is that we have access to a lot of our coaches' recordings, regardless of where you're at. Remember, if it's recorded, you're sleeping during the class, you have that peace of mind that you could wake up the next day or the day after, or if you're going to spend this weekend maybe just watching recordings, you don't have to be there during the live class. You could watch these recordings over the weekend. So yeah, that's a little bit about my background and what has led me to talk about the slow markets and have this slow markets class. It's been fun. We were just barely getting into it. This has been the first week. We are just barely talking about it. We'll be able to start talking about more in-depth concepts. The last thing that I want to do, and the most difficult thing as a coach here at Topstep, is we have such a wide variety of traders here with different levels, right? We have brand new traders who are experiencing placing a trade for their very first time on a combine. And then we have veteran traders who have been around for a while, who know a lot of these market concepts. So as a coach, how do we reach all ends of our traders, right? Because we have such a diverse group here at Topstep and thousands of traders with different skill sets. And it's hard, because if I wanted to start really talking about really complex and in-depth market concepts, then I kind of start losing those traders who are placing their first trades for the first time, right? They don't understand too far in depth of some of the concepts. And then vice versa, right? We have traders who are taking those very first steps. An advanced trader who's been here for a while, they don't want to sit during a full 1 hour class with me talking about, this is a 3-bar reversal and candlestick patterns. So it's a little bit of give and take, and that's why we record the classes. So that way, if you see a class that you feel you want to watch or listen to, join it, listen to it, watch the recording. And we're trying to find different ways to reach all of our audiences. It looks like we're talking NASDAQ's moving a lot. I do see the NASDAQ. I do primarily focus on the NASDAQ during slow markets. I'll talk about the NASDAQ at first, and then we'll start talking about other markets. That one night when the market started going crazy, we looked at gold. I placed some trades on oil, and we even looked at a few other markets that I typically don't look at, but that's the beauty of slow markets. You have the time to do that. You have the time to look at the different markets, because the markets typically do not move as fast. Where is the Discording? Yeah, I don't know if you could post a link in there for me on the YouTube. If someone wants to post a link to Discord there on the YouTube chat.
Yeah, we'll get that posted for you.
Yeah. That's the thing, because Discord's free. You just sign up and then you have access to all of that resources. We have a lot of different channels on Discord. I like to follow the indices channel. All the traders who are on Discord, who's maybe placing trades or doing their own analysis, and they post it there in Discord. And it's fun to watch. It's great to see all the different traders and the way they're using their strategies. Thank you for posting that. There it is. And I've learned a lot, to be honest, as a coach. I was able to watch traders and see their different strategies, talk about coaching. And I think you even heard Jay yesterday, Coach Jay was mentioning the same thing. As we're coaching and as we're talking to traders, we're able to learn as well, right? There's almost an unlimited amount of opportunity for new traders, experienced traders, us coaches to learn from one another. Because as we're talking about the markets, nobody knows for sure which way the markets are going to go. And that's what makes a market, right? For every buyer, there's a seller depending on what price point. And I might have a bullish bias. I tell my traders all the time during the slow markets that, I'm bullish. I'm at heart a bull, and I might be looking to buy the market. And at the same time, during my live class, there's traders having the exact opposite opinion, and they're posting, their analysis saying, I'm looking to short at this almost the same area that I'm looking to buy. And so essentially, I'm the buyer to that person who's trying to sell, and we're having that type of a discussion. And, that's good. For me, it's never a competition, and like it's me versus a trader or anything like that, because we are really in this together. And the last thing that we want to do is to influence our traders on a direction or a bias. We're mainly talking about concepts and understanding that there are more opportunities out there during the Asian market and during the slow markets. And we're talking about concepts, understanding risk reward, and those types of things. And we're never going to be leading our traders to have specific entries or bias in the markets. So yeah, I think that's for the most part on what I had for you guys today. Like I said, if you have any questions, feel free to reach out to me on Discord, send a message. And it's not just me, all of our coaches here, we are joining each other's classes. We have those different classes, and we have that opportunity to bounce ideas off of one another. So Jose, there should be a coach's library in Discord. If not, you could go ahead and just ask in any channel, and they'll direct you to the right place. Yeah, we have some great mods, ambassadors, I believe we're calling them. We do have some staff, I believe, on Discord, and the community is amazing. That's what really led me to stop Topstep, and it's led me to stay here with Topstep and become a coach. Okay, well, that's all I had, really.
Sounds good, man. Well, thanks for sharing. And that brings us to the end. With 50 winners today in the quiz, I have them, but I can't share 50 winners right now. I will be emailing you because I have that. And who knows what tomorrow will bring. Dakota, thank you so much for joining us today.
Yeah, thank you. You guys love free stuff. I see it all the time. Whenever we start talking about something for free, we get a really boost of traders that join. And, that's maybe another talking point about joining Discord. You guys who like free stuff, sometimes we have giveaways on Discord as well. I did a combine giveaway, and we're doing fun competitions on Discord as well. Whenever I host a class and start talking about free stuff, we have a really big spike in attendance. And then as soon as the giveaway is done, we go right back down.
Yeah.
So I think I even heard you talking about that on our YouTube subscribers.
Yeah.
You guys haven't subscribed.
Well,
do it.
What I'll do right now is subscribe if you're a real person. Let's do that. But I'll give a smattering of, and I hesitate to do this because sometimes people mishear the names in an email. I am sending an email to the winners this evening. If you think you heard your name, I'll give a smattering of winners. McFly won, Otto, Radio Flyer, Moon in all caps, Bliss, Jant, Borneo Trades, Guppy, Onyx, Smitty, Arpan. The winners are there. I'm not going to read through all 50 right now, but I will send out the email. So hope you all had a great day today. Dakota, thanks again. And have a great evening. We're going to see you bright and early tomorrow at 8. I'm going out of town. JD's behind the box. Sounds good to me. So,
yeah, we got football this weekend. I
Hell
think the NBA
yeah.
basketball's getting ready to start as well. Are you a Bears fan?
Unfortunately.
Oh,
Every team I like is terrible. So I'm done with sports.
There's nothing wrong with it. As long as you're not a bandwagoner where you're jumping from side to side. I have a few nephews that they're really big Patrick Mahomes fan, and they started watching it for the sole purpose. It's those what do they call them, fads or trends.
Yeah, seriously, I wish I could do that. So I had something. I had a friend in college who was like a Patriots, Lakers, Yankees fan or something. And this was in the mid 2000s. Like, get the F out of here, bro.
Yeah, we've had some good debates or conversations on Discord talking about, the good LeBron and Michael Jordan debate, and that seems to get some of the traders going.
Yeah,
and it's always fun because, we are also having conversations outside of just trading. We're a community, we're one big family, and we talk about a lot of stuff. Of course, it's primarily trading, but we do have other conversations and have fun, just like everyone does here on TopstepTV. But tonight I have my slow markets class. Markets are slow, and we have conversations about so many different things, but I look forward to having you guys. It looks like we have just over 1,000 people online here on YouTube. Hopefully we see a lot more of you guys on Discord.
great. I'll tell you what, Dakota, you can just exit the browser. I'm not going to get out of here without showing these winners, I don't think. So
I'll stay and watch.
Okay, stay in Vamp for like 30 more seconds. I gotta like take a screenshot. It's gonna be small. I hope you guys know. 1 second. All right, I am.
Hey Zach, class, the slow markets class is at 8 p.m. Central Time. Yep, like I said, it's Monday through Thursday, 8 p.m. And it's called Slow Markets. There's an events calendar on Discord. You could see it. You could click on notification, and it should give you a notification when I start the class. I called it Slow Markets because it's a play on our fast markets here on TopstepTV that they're doing when the markets are moving fast during the high volatile times. So it's kind of the opposite, slow markets.
Ooh, that's good. I wish I had thought of that.
Yeah, I paid a guy to
paid a branding agency to do that.
Yeah. It was between that and Charts After Dark.
Ooh, man, that's a good branding agency.
Yeah,
Those all sound pretty good.
The only thing with that is we have traders around the world, and it's not always dark.
Yeah, therein lies the rub. Okay, I'm so close to getting this up right now. You only have to vamp just a little bit longer.
Yeah. I plan on having classes during London session, some conversations. For me, London session's at 1 a.m. Sometimes I'm awake then, and I've been considering having sessions at 1 a.m. I'm just trying to get our slow markets class into a consistent schedule and start talking about that, and then maybe I'll start having classes at a different time. If you're not, feel free to reach out to someone on Discord about those videos not playing. Usually you click on a link and it will take you to like Loom, and you can watch that recording.
All right, let's see. Stuck around here. Still got over 1,000. Okay. Are you ready for this, Dakota?
Let's see it.
Whoop-pow!